events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, all the major averages for the stocks, at least, down over 1%, and Treasury yields are surging. The latest Wall Street betting shows traders are leaning toward a rate cut for the Federal Reserve now in July. Remember, they were keen on a rate cut as early as next month. So a lot of disappointment with risk assets this morning comes, of course, after the CPI showed inflation topping forecasts. Before that report, we talked to Citigroup private bank Stephen Whiting. He argued the recent climb in stocks will probably be broadening out.
We're going to see profits climb much more broadly for companies this year. So some way or the other, we don't think we get to another 26% return year for the S&P 500, but I think it can be with much broader participation.
Right now, the S&P 500, 59 points lower, down 1.2%. Below 5,049.62 on the index. The Dow Jones Industrial Average down 489 points. The Nasdaq 100 down 185 points. That's a decline of 1%. The two-year yield is up 11 basis points. That's at 4.59. 10-year yield up 9 basis points. That's at 4.27. And among the earnings, Coca-Cola reporting higher than expected revenue in the fourth quarter. A growth in Mexico, Germany, other markets offsetting lower demand in the U.S. Shares of Coca-Cola, they've actually just turned lower. KO, that is down 0.3%. And we check markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate it. Alex Steele, Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Radio. As John was just reporting, markets selling off today. CPI print came in a little bit hotter than expected. So if you were in the camp saying, I think the Fed's going to cut sooner rather than later, probably today's not your day here. Let's check in with somebody who does this stuff for a living, Jeffrey Cleveland. He's a chief economist at Payton and Regal, joining us on Zoom from Los Angeles. So, Jeff, is this a bump in the road for the dovish Fed folks, or is this something more on the inflation front?
I think it's probably something more. I mean, this is pretty disappointing if you thought the Fed was going to cut in March or even May. Really disrupts the trend. So whether you look at core CPI up 0.4% month to month, or, as the policymakers have counseled us, we've been looking at core services ex shelter. That was up 0.9% month to month in January, the highest print in over 2 years. So that's there's some inflation pressure still in the economy. So I think this really should dampen expectations for cuts.
Jeffrey, maybe what we're learning, though, is that inflation is just lumpy, that it's just going to be hard. It's not going to be a straight line down for disinflation, but it'll be sort of a volatile, evolving target. How, as an economist, do you kind of factor that in?
Yeah, so, it's possible that January has some noise. I think we saw that to pre-2008. If you go back to that era, you would often see Januaries where you'd see some price increase. So maybe that's what we saw also last January of 23. So I don't want to overweight or over-index to this particular number. I think that's important to keep in mind. It's possible by the time we get to summer that core CPI will, have cooled off a bit. But I guess at that point, you're still going to have 3% plus year on year core CPI. So maybe something like 3.4 or 3.5. Is that enough, or is that cool enough to justify rate cuts? I don't know. That's going to be a tough question. So I think that month to month, you could be lumpy, you can have noise, but it's a question of, okay, where are we going to be by mid-year? Even in the best case scenario, it seems like we're 3% plus on core CPI at mid-year.
Jeffrey, what do you guys at Payton Regal calling
for rate cuts?
Yeah, hey,
yes, go ahead.
Jeffrey, just wondering what you guys are thinking about in terms of kind of GDP for the U.S. in 2024 here. How measured is it going to be?
Well, we're pretty bullish, actually, I
Okay.
think. But compared to the Bloomberg consensus, right now we have a 2% GDP growth for 2024. I think the Bloomberg consensus last time I looked was closer to 1.1%. So that is powered primarily by the consumer. So we're still pretty upbeat at Payden about the health of the consumer, the strength of the labor market. The growth in consumer income has been really, really key. I think that's why a lot of forecasters maybe were too bearish in the last 12 to 18 months. They just not seeing that the consumer income growth was continuing. So pretty upbeat on the growth prospects for the U.S. economy, at least.
What I love when we were just talking about inflation, though, is that you sound like you're trying to work it out just like we are. And I think that like says a lot about how hard it is to probably be an economist right now, because some things just don't make consistent sense. So how do you then model out, if you take into the growth that Paul was talking about and the inflation confusion, when the Fed cuts and what that cutting cycle looks like? And if it's a normalization versus, oh gosh, growth is terrible, it's a recession, we have to cut now.
Yeah, it's not that difficult. I mean, we look at what the market is pricing, and if you go back a few weeks, months, the market we thought had too many rate cuts priced in. Why did we think that? Well, because we thought growth would come in better than the market had anticipated. We thought you could have some, lumpy inflation as we've seen this morning. So we had fewer rate cuts penciled in. And what we found over the years is, this happens from time to time, but the bond market just gets ahead of itself, where it has too many cuts priced in. And then we can take advantage of that in portfolios by positioning a little bit more conservatively. So we weren't adding to duration and expecting that rates were going to rally here. So that's kind of how we process this information.
Jeffrey, how do you feel about the labor market here? That's been one strong part of this economy from the get-go here. Is it still as strong as it seems?
Yeah, in fact, it looks like it's picked up in the last 3 months. If you look at the 3-month moving average of non-farm payroll growth, it was, as of January, 289,000. I mean, that's excellent, Paul. I mean, like the way to think about that for me is just we need about 105,000 jobs every month to keep the unemployment rate at where it is. So if you're growing at 289,000, that's a pretty good labor market. That's a pretty strong labor market. So things look solid. We're looking at real time, looking for signs of layoffs. I mean, we're seeing it anecdotally, talking to clients in tech. We're seeing it there, but we're not seeing broad-based layoffs, at least not yet. So the labor market looks solid in my view.
Solid labor market, growth's okay, inflation a little lumpy.
Sticky,
Sticky, but it's all right. Is the Fed fueling this? Like, is the Fed cutting cycle that we're anticipating and the looser financial conditions that have already happened, is that fueling any of this?
Well, I think the Fed has been pretty clear, like, hey, we think if things progress, if we continue to see broad-based inflation, on target month-to-month inflation, later this year, we could reduce our policy rate. That's what they're saying. The bond market is the problem. It gets ahead of itself, saying, oh, yeah, I mean, they're going to be cutting 6 or 7 times. That was probably the easing of financial conditions. I don't really blame the Fed for that. When I listen to Chair Powell, when I listen to Christopher Waller, I think I've heard a really measured story, which is, hey, this is not a slam dunk. We're not declaring victory. We'll see how things progress over the next few months. It was the bond market. It was bond trade. I blame bond trade.
It's Ira Jersey's fault.
Yes.
It's all that guy.
Someone else. I don't want to name particular names.
No, I'm kidding. All right, great stuff. Really appreciate it. Thank you very much, Jeffrey Cleveland, Chief Economist over at Payden and Regal. Thank you very much. But it's kind of interesting to see, hear economists work through some of the data points, because it isn't a straight line, and it is really confusing. And I'm also just questioning sort of what we get back to, and that difference of normalization versus a cutting cycle where growth falls out, and what the normalization looks like. We don't know where the natural rate is. We don't know where the neutral rate is. We don't know what that moved up. And I find that interesting. How do you manage that as an economist? I'm glad I'm not one.
I'm glad I'm not one, and I'm glad I'm not long the market yesterday afternoon for today's trading, because S&P's off 1.2% and the Nasdaq's off about 1.2%.
Bet all those people who didn't buy puts are kind of bumming right now.
Exactly. WTI crude oil, that's also a little bit higher, $77.40. And Bitcoin, we breached 50,000 earlier today. We were at 50,300. We're now at 48,800. So Bitcoin moving higher, and from what I hear, it's because the halving is happening this year, where they're going to limit the number of new coins mined.
really?
as well as the demand from the ETFs. You put those two things together, and that's pushing spot Bitcoin higher. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with your company news. In a sea of red on the screen today, one of the standouts, JetBlue. Those shares up close to 12%. Activist investor Carl Icahn taking a 9.9% stake in JetBlue Airways. He has plans to seek at least one spot on the board, and that aims to boost shareholder value in the wake of the near collapse of the carrier's deal to buy Spirit Airlines. Affiliates of the billionaire disclosing a position in JetBlue, and that is valued at $204 million, and that makes Icahn the third largest shareholder in the carrier. Coca-Cola CEO James Quincy expects consumer prices for the company's beverages to moderate in the year ahead. This comes after several quarters of price hikes to offset rising costs for commodities and some of the other things that they put in their drinks. He was interviewed today. Inflation remains a pitched issue in the U.S., despite some evidence recently of moderation. It wasn't the case this morning. Blackstone considering withdrawing from the bidding for a controversial football media rights deal in Germany. This, according to people familiar with the matter, this follows a backlash from fans critical of foreign capital. And I know you've been waiting for this one. Rappers Snoop Dogg and Dr. Dre expanding their respective consumer products empires with a foray into the spirits space. So they're coming out with a ready-to-drink canned offering, Gin and Juice by Dre and Snoop. All right. I'll go for it.
People love those mixers, though.
Yeah, it'll be available in 4 flavors. Apricot. That sounds like a commercial. Wait a second. So, 30 years after their hit collaboration, Gin and Juice. That's where it's come from. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good afternoon. Afternoon? Morning? I mean, it depends.
It's
Sure.
afternoon somewhere.
Yes.
I agree. For me, it's afternoon. You're listening to Bloomberg Intelligence on Bloomberg Radio. I'm Alex Steele, Paul Sweeney alongside me. Let's go to Michael Barr now for world and national news.
Alex, Paul, John, the Senate worked through the night and into the early morning hours to pass a $95 billion aid package for Ukraine, Israel, and Taiwan. The vote was 70 to 29 to send the legislation to the House. Bloomberg's Jody Schneider has more from Washington.
It is without any of the border immigration changes that had been in the earlier much negotiated bill. It is just the funding. Now the question is, what does the House do with this? There's a fair amount of dead on arrival talk among the Republicans there, but it will be hard to totally ignore it because it has that aid to Israel that a lot of the Republicans have said they want to see.
Bloomberg's Jody Snyder in the nation's capital. House Speaker Mike Johnson put out a statement rejecting the bill. He says America deserves better than the Senate status quo. They failed earlier to impeach Homeland Security Secretary Alejandro Mayorkas. Now House Republicans are determined to try again, but it's not all certain that today's scheduled do-over will produce a better tally. The evening vote is expected to be tight, even with the arrival of Majority Leader Steve Scalise, who has been away from Washington for cancer care. Republicans criticized the Biden administration's handling of the record number of migrants at the U.S.-Mexico border. A nor'easter poised to dump between 6 to 9 inches of snow on New York City today, snarling commutes, forcing schools to go to remote learning, and prompting Mayor Eric Adams to urge residents to stay home.
We want to minimize the number of vehicles on the road so that our apparatus and vehicles can actually deal with the removal of snow and make our movement in the city more feasible.
Northern New Jersey, eastern Pennsylvania, and southern New England can see a foot of snow. Hopefully, the system will be out by the afternoon. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, Alex, John.
So I'm here, right?
Yes,
I'm in the
of course.
office. We got in.
Verify.
My husband is at home working and also trying to get my daughter to work. Yesterday, he spent an hour and a half screaming at the laptop, trying to get the stuff to work because apparently many New York City school families trying to log in at the start of the remote school day during a snowstorm were greeted with quote-unquote tech problems. There were screenshots all over social media of a black screen or error message. Everyone else was complaining about remote schools. And this is kind of a big test because since COVID, as we've been talking about, there are no snow days. It's going to be remote learning days. And so helpfully, the DOE wrote, "We are experiencing technical issues."
Oh, boy. And
Yep.
around 9:30 a.m., the school system posted that IBM had added capacity and improvements are rolling out across the system, and parents began to gain some access. So this, I mean, all right, so since 2021, New York City has replaced traditional school closures from snow with remote learning. Do we like that as a parent? We don't like that.
Not really. We don't like that as a parent. I mean, to be fair.
Your experience and my experience is the
Totally
same thing
different.
with kids. No,
Oh,
not
same.
totally different. I would have to say it just doesn't, it's not effective.
But, you know, my husband is home and he's super engaged.
Right.
If I was home and I had to broadcast from home, I couldn't be engaged. So, like,
Right.
he's making sure she's doing her homework. She's doing lots of shout-outs for the husband today.
Yes.
But, like, she's doing all the right things. If you don't have the opportunity to do that, or if you have to go to work,
Right.
then the kid's really, like, on their own to figure all this out. I don't really know what the upside is to that.
Right.
At the end of the day.
All right, but in New Jersey, as Ira Jersey from Bloomberg Intelligence was saying, his school district for his kids, they closed.
Private schools are also closed.
Private
like,
schools
just
are-
legit closed.
Okay, so
With
okay.
no remote learning thing. So the more you pay, the less learning you do
You get
online.
okay.
I don't know.
But the New York
There's something
City
to that.
schools, they're doing the remote. learning.
They're doing this
They're trying to.
remote learning. But you love the idea that, like, hey guys, we're gonna go remote, we're gonna crush it, we figured this all out, and then it's like boom, nope. You can't do it, but you can't be marked present unless you join the 8:30 morning meeting.
Really? Oh man, this is I don't know. I'm glad my kids are out of school.
I'll keep
That's
you
good
posted.
stuff.
I got
All right,
you.
good stuff. S&P 500 off 1.25%. The Dow off 491 points. That gets your attention. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to get the latest on the weather. I'm looking out the window. It's snowing, but I think we can do a little bit better than that. Lindsay Dutch is going to join us. She's a Bloomberg Intelligence analyst. She covers Hasbro. Really, the toy company had some a little bit disappointing earnings. I love Hasbro. Mattel's the other player in that space. And then I believe this has something to do with my co-host, Alan Armstrong, President and CEO of Williams. He's going to join us to talk about natural gas.
Oh, yeah.
Okay, so natural gas is cheap, right?
Yeah, it's cheap. But
Okay.
we have the whole export thing, so we're going to talk about that. They're an infrastructure play for
Okay,
sure.
very good. I like that. It's energy. I don't know where the energy angle comes from, John Tucker, but we'll see how that plays out. Let's go to John Tucker and start this hour off with the Bloomberg Business Flash.
All right, lots of red on the screen. All the major stock averages right now, they are down more than 1%, hotter than estimated inflation data, triggering the slide in both stocks and bond prices. The core consumer price index topping estimates climbing the most in 8 months. Yet Treasury selling off across the curve, so the two-year yield hitting the highest since before the December Fed pivot. And the Fed swaps, you have to look at that too, shifting the full price of a rate cut from the Fed to July from June. Still, not a level, and UBS says this morning's inflation numbers really nothing to panic about.
Yes, inflation did come in a little bit hotter than we expected. We were looking for 2.9 on headline and 3.7 on core. But I don't think that this one data point changed the narrative. The Fed has been hinted for some time that March rate hike was off the table.
Microsoft and Apple leading losses in the mega cap stock space right now. S&P 500, 61 points lower. That's down 1.2%, 49.60. And let's see, the best performer in terms of the index points, shares of Ecolab, they are higher right now. They are up just about 7.5%, adjusting earnings per share forecast. That beat estimates this morning. And we also have the NASDAQ Composite Index 1.3% lower right now. The Dow Jones Industrial Average 485 points lower. That is down 1.25%. And right now, the two-year yield 13 basis points higher. That's at 4.6%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you very much. All right, it's snowing out. We talked about it. Kids are home. They're learning. Let's go to Brian Sullivan. Quick hit here on where the weather's at. Brian, are the airports open? Are they closed? Are the trains moving? What's the latest?
We're going to have a few more hours of snow here, and then it's going to start to taper off by 3 o'clock or so. In New York City, they'll be winding down, and then the commute home should be, relatively snow-free, just whatever's on the ground.
So, Brian, how much are we looking to get here in Central Park? That's kind of the benchmark here for New York City.
Yeah, it looks like about 3 to 6. I think three's already on the ground, so there'll be maybe 2-3 more inches on top of that.
All right, Brian, thanks so much for joining us. Brian Sullivan, Bloomberg weather reporter. I was just looking on another network from Ridgewood, New Jersey. Looks like they got a lot of snow out there, trees down, all that kind of stuff. So it's a little bit tougher out there in the burbs. I'm looking out on the streets of New York City. Nothing's really sticking here, so everybody's just kind of making their way.
I'm looking at the door cam.
The what cam? Oh, the door cam for
Central New Jersey.
Yes, for the John Tucker
Too
State.
bad. Who's this guy coming up on my porch, though?
My husband does.
Get out of there.
Taking the package off my doorstep. All right, we've got a treat here. Let's see. We've got Abigail Doolittle joins us. She covers all the markets for Bloomberg News. Abigail, a little bit of sell-off here today, I guess, on the back of the CPI data. What are you seeing out there?
Well, I have a treat for both you and Alex. Nice. I can't think of two more appropriate people for this. So the RSI on the S&P 500 on this sell-off has gone back into not overbought territory on a series of lower highs, telling you that the momentum has been declining. So the record high that we had briefly yesterday, the all-time record high, it was on less bullish momentum than the highs that we had back in December. So that was a sign that at some point we were going to see sellers and buyers change hands. But yeah, the CPI print, it came in a little bit hot. Nobody's looking for it. We have a gap down. That tells you that today's sellers are totally surprised. They weren't thinking that this was going to happen at all. On top of that, from a technical perspective, because you all know that I really like charts, it is within a topping pattern. That's just a fancy way of saying that people who bought well, months ago, they're starting to really get out now to people who bought less well, just a few days ago, and that there could be more selling ahead. And, the Fed's fight, it's not over. The Fed's been telegraphing this. They've been saying, yes, we'll cut this year, but it's not going to be for a while. So now we have that divide between the street and the Fed narrowing a little. Yeah, we just got a note today from Stuart Kaiser, head of equity trading and strategy at Citi. He's saying, hey, no biggie here. Maybe a 2 to 4% type pullback here, which is healthy for the market. So that's what the trading desk at Citi is seeing.
And because we were so overextended, in some ways, this is a healthier. It's good that it happened, right? Because we were kind of waiting for it versus a blow off top, and we're off the lows, so there are clearly some buyers in there. Worst guys though are the best guys, right? ARM, Microsoft, Nvidia. How hard are they getting hit?
Well, ARM is getting hit pretty hard, down more than 10%, and this, of course, after having that massive
100%
surge
rally in a
within
week or
3
something.
days. It was crazy, yeah. And the interesting thing is they did put up a great earnings report. What really got investors going was the fact that they have an AI chip, but unlike other companies that are just trying to attach AI to anything that they do, they have an actual AI chip, and they announced that they have a contract for it, that IP will be able to be sold, that revenues will come in this year. So investors were all in on it. Now, from a technical standpoint, that much of that rally seems as though it will stick around, but that's a perfect stock for when you have a risk-off event like today, or risk-off mood like today, animal spirits gone, you're going to see one of those stocks that's been up in a big way. For the tech stocks, the liquidity concerns, valuation concerns, just puts it front and center. Plus, those stocks have been up so much. Investors have really gotten a little bit too far out over their skis, and so now we're having a little bit of reconciliation. And as you were talking about that with Citi in terms of the decline, this topping pattern that I talked about, just for it to make it to the bottom of the topping pattern is 5%. If the pattern actually confirms and moves toward the downside of its target, it would be the 200-day, so probably closer to 10%. So I wouldn't actually be surprised to see February, March turn into a correction.
So just let's go back to ARM for a second. This isn't like a meme stock.
Well, it's so interesting, Paul, because yesterday...
Now we're $125 billion
That's
company.
what I was thinking. I was looking at,
No, it's so Alex and I were talking about this one with Romaine yesterday. It was the stock of the hour, and the producer, Aviel Brown, came to me and said, this is what we want to do. And I looked at it, I was like, why do we want to look at this? It's a meme stock. And then I dug in a little bit more. It's legitimate from the standpoint that, early serious investors, they understand the fact that, so they don't actually sell chips. They sell the designs to chips, the intellectual property and those revenues and royalties and that sort of thing. They understood that this year that there very well could have this AI design. So you have investors basically, you hear people talk about buying baskets of AI stocks. Right now, if you do that, the bulk of those stocks don't actually have AI. These are the NVIDIA, AMD, and ARM are the only 3 chip stocks that actually legitimately are going to have revenue from AI this year. So there's that reality, but there was that overdone quality because then you have the frothy institutional getting in and the retail. Some of them getting, I hate to say it, but, slapped around a little bit today.
Oh, yeah.
Yeah, not buying, just buying on the surge.
And you saw the fund manager survey from Bank of America, just like how kind of one-sided the trade was. Like everybody back into big tech, like moving down your cash levels. Anyway.
FOMO.
Oh, yeah. But FOMO for sure. But then again, we're off the lows. So I really am interested in how we close.
I am too. It's interesting to see that these losses have actually held so far.
Agreed. All right, Abigail, thanks a lot. Really appreciate it. Always fun to have you, Abigail Doolittle, joining us there. Let's get to some individual company news, we get Hasbro reported fourth quarter net revenue and adjusted earnings per share that trailed the average analyst estimates. Their outlook also fell short of expectations. They're looking at declining sales for its consumer products and Wizards of the Coast businesses. I don't know what that is.
Wow,
I don't know what that is.
You got the kid.
That's true. But if I can't help you, no one can. But you know who can? Lindsay Dutch.
Yes.
Bloomberg Intelligence Consumer Hardlines senior analyst is standing by for us. All right, Lindsay, what'd you make of the quarter?
Hi, Alex and Paul. Thanks for having me. So Hasbro definitely disappointed on the quarter, as you mentioned, top and bottom line missing. But more importantly, that outlook for 2024 looks pretty rough. They're definitely thinking about the toy industry more bearish than some of their peers like Mattel. And this is coming from a place where they've had more challenges than Mattel in 2023 and even at the very end of 2022. So there's some concern about profitability improvement for this company. They sort of have struggled to raise that operating margin over the past year. And I think that's like a really big worry bead thinking about 2024. They posted an operating margin for 2023, 9.5%. It was the lowest in at least 12 years.
Wow.
So there's real concern there.
So let's just start with the top line in the toy business. Is this a GDP growth business? Less, more? How does this business grow?
Yeah, so typically, I mean, the toy business, you think about growth 2 to 3% a year. That toy business boomed with the pandemic.
Yep.
So we're still coming off of those 2020, 2021 highs. And this, in 2023, the industry contracted about 7% per Circana data. Mattel was thinking that, this year, 2024, would be a little bit better than that, but still contraction. Hasbro is saying down 8%. So definitely a more bearish view on the industry as a whole. But this year definitely looks rough in terms of toy demand still coming off of those highs.
And they don't have Barbie. I mean, I asked the CEO of Mattel this on TV. I was like, do you need a Barbie too? Like, what's your next evolution here? I mean, I know the quarter was better than Hasbro, but it still has problems. There's still an activist investor that wants them to spin off their American Girl and Fisher-Price business, etc. It's like you have to sell more cars if you're not selling dolls. And Hasbro doesn't have Barbie. How reliant is the toy business on movies?
Yes, so content has been a big driver over the past couple of years. Barbie is a great example of that. I think we also know that you can't have that blockbuster type movie every single year. But a lot of the preschool brands, you can link to a series. So Hasbro does own Peppa Pig. So just getting like the animated series there sometimes can help with toy sales. But there's a major connection with entertainment. Entertainment generally across the board, not just Hasbro specific, is going to be light in 2024. So they do lose that driver. Hasbro is also different than Mattel in the key categories that they play in. So they own Nerf. So they're really big sort of on that outdoor category, which again, that's an outsized grower during the pandemic coming off of really difficult comps there. They play in arts and crafts with Play-Doh. Play-Doh's like, they've come out with some new products, but it's kind of really hard to come up with new innovative things in that category. Some of their outperformers were like Transformers in the past year. Again, an entertainment-linked product, that did well because of that.
All right, so if I've got a business where the demand is challenged, what do I do on the cost side to try to preserve my margins here?
Right. So, Hasbro laid out a plan in October of 2022, cutting costs. They kind of realized over time that it wasn't quite enough what they were planning. So they sort of doubled that goal, a lot of it coming out of SG&A. They're also offloading some of their brands and basically licensing out to other manufacturers to actually make the products. And that is going to be a key part of, their outlook for a stronger operating margin in that toy segment in 2024. And by that, they're expecting a 4 to 6% operating margin this year, whereas last year it was an operating loss. It's still a pretty low number. It's well below. They're targeting 20% over the long term. Mm-hmm. So there's a lot of work to be done there.
What's the Wizards of the Coast segment? Because that really hurt. What is that?
So that includes their Magic of the Gathering, tabletop gaming, digital gaming brands. Mm-hmm. So that has been a top grower for this company over the past couple of years. They're again lapping difficult comparisons, only expecting 3 to 5% growth in 2024. But that business is a high margin business for them. So you're talking about 38, 40% margins. But the problem is it's closer to 30% of their overall business. So as continued growth there is great, the margin is great, but it's still a smaller part of their mix. So it can't quite offset this weakness that they feel sort of in the traditional toy business.
I know you cover broad lines more broadly here, but the beauty sector and the beauty segment is one that blows me away. We've got a Sephora right across the street from the Bloomberg HQ here on Lexington Avenue. That thing is packed all the time. What's going on in that side of the business?
Invest in your face. How many times do I have to tell you, invest in your face?
Yeah, John and I missed that.
Yeah, beauty has been doing excellent. The demand there is just incredible, continues going forward. We have an annual survey that we run to kind of gauge demand. And this year, again, people plan to spend at least as much, if not more, than they spent last year. Key categories, skincare, cosmetics is even showing a rebound now. So demand there is quite extraordinary, much better than the toy business right now. And the innovation in that sector is also quite helpful. There's always new products coming out. We're always discovering new things and things to better our routines. And, people really are willing to sacrifice spending in other areas to continue spending on beauty.
This is true. I said, that stuff never goes on.
Well, again, everything, all the shops around our HQ here in Midtown, everybody left during the pandemic, except the Sephora and chocolate.
That's very true.
That's it.
And they haven't really come back except for a bank/coffee shop.
Yeah, so we'll see how it goes. I mean, this retail, that's a whole nother game.
I know.
All right. All right, Lindsay, thanks so much for joining us. Lindsay Dutch, consumer hardline senior analyst for Bloomberg Intelligence, joining us via Zoom from Hopewell, New Jersey. Yeah, the chocolate, people were buying chocolate. And they're buying.
Yeah, because it's like $100 for a piece of chocolate. So I went and I bought like some of the so it's Ladderroch, right?
Okay, yes.
Lauerbach, it's some Swiss thing.
Yes.
And you buy sort of chocolate covered popcorn, so good.
Yep.
It's like $30.
Yeah. But
Matt Miller swore that store was a front for something else.
No, that's Sweet Melissa's. I'm convinced that Sweet Melissa's is a front. I never see anyone in there. The tourists go crazy for that chocolate. It is really good.
Yeah, so chocolate, and again, so we'll see some stores are coming back. But anyway, people were in for that chocolate all during the pandemic. I saw people in there with their mask and the screens and everything. They were still buying their big, expensive Swiss chocolate. So I guess that's the thing.
Is that your jam? Is that what you'll spend the money on?
No.
So no face products, no chocolate.
Yeah.
Wine.
Yeah.
Nice bottles of wine.
Yeah.
Wine and tools for me. Like a nice table saw.
Not together.
Not necessarily. You shouldn't.
Not power tools after a box of wine.
You need to go to one of those bars where you can throw axes while you have beer.
Is that still a thing?
That's totally a thing.
Wow. I never, ever got that. There is a restaurant in town where you can fire a weapon, a gun, in the basement. And it's pretty fun. It's the only time I've ever fired.
It's a bar?
No, it's a restaurant. I'll talk to you. All right, we're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. Stock sell-off today. S&P 500 right now down 1%, 1.1% to be exact. This all comes after reports showing inflation remains sticky in the U.S., and traders pushing out their expectations for the Federal Reserve's first interest rate cut from June to July. That's also sending Treasury yields soaring. The core consumer price index that strips out food and energy costs because they're so volatile, unexpectedly rising the most in 8 months. And right now you have all 11 major industry groups in the S&P 500 lower. The biggest drags coming from utilities as well as real estate. The Dow Jones Industrial Average 422 points lower. That's down 1%. Again, the S&P 500 54 points lower, down just about 1%, 49.67 on the index. And the NASDAQ 100 right now, that is down 207 points. That is a decline of 1.2%. Two-year yield, 13 basis points higher right now, pushing the more policy-reactive Treasury up 4.6%. Up to 4.6%, I should say. And we check the markets for you all day long, right here on Bloomberg Radio. You know, we have all the monitors up here. It just occurred to me.
I know, me too.
It's Mardi Gras.
It's Mardi Gras. You know,
Oh, hey.
folks down in
We missed it.
Tomorrow's
No
Ash
kidding.
Wednesday. Okay.
Oh, we could have done the thing. What's it? King's cake?
The what?
The big cake that you get for Mardi Gras. Isn't it called King's cake?
Don't know. That's new to me.
Wow.
I thought you just go down to New
Throwing
Orleans
beads or
and
something.
beads and
Sure.
drink and go down to Bourbon Street.
Beads and drinking.
I think we wrapped all that up.
Yes.
Excellent. I'm Alex Steele, Paul Sweeney, and John Tucker. This is Bloomberg Intelligence, where we cover all the amazing analysts that we have at Bloomberg Intelligence right here at our fingertips, 2,000 companies and 130 industries. And because it's me, now I'm going to make Paul talk about natural gas.
Yes.
Williams is one of the largest natural gas pipeline movers. Well, oil and natural gas. It's a midstream company. That means the pipes. It moves the stuff. It's one of the biggest in the entire country. Alan Armstrong is president and CEO. Williams reports tomorrow. So we're not going to ask him about earnings, but we can go macro with the stock up about 8.5% over the last year. Alan, you're in D.C. What are you doing in D.C.?
Yeah, Alex, good morning, and great to speak with you as always. We are in D.C. because we have a combination of both our Analyst Day that we'll do tomorrow, as well as today we're doing a Clean Energy Expo, and we've got a collection of regulators, legislators here with us, as well as a lot of the startups that are in the technology business associated with reducing emissions in and around our business. And so we're really trying to demonstrate all that we are accomplishing in terms of reducing emissions around our business and kind of the power of natural gas in its ability to reduce emissions around the world. So it's a great opportunity to bring, we've got parties from both sides of the aisle here with us, and a lot of the regulators and agencies that we engage with on the energy front as well with us.
So, Alan, I know from just going back and forth with your company that this was on the schedule before the Biden administration put a moratorium on LNG exports to non-FTA countries in terms of new approval for projects. How is this playing into the conversation? They say it's an environmental impact, right? You're exactly talking about the environmental impact. What's the convo?
Yeah, you know, we are certainly trying to draw awareness of all that the U.S. has to offer. I think a lot of people forget that the number one reason that we were able to meet our Paris Climate Accord here in the U.S. was on the backs of natural gas. And we want to bring awareness to that. But we also want to show, you know, one of the things that we hear from what I would say is the serious environmental opposition is the concern around fugitive methane emissions. And that goes for LNG as well. And, you know, really, it's not that difficult to reduce fugitive methane emissions from our industry. And we're doing that with some great new technologies as well. So it's really a combination of those things. But LNG really is such a powerful tool that the U.S. really needs to unleash. I think we see it as a very unfortunate political move that really does stand in the way of progress of the U.S. being a bigger and bigger player in helping reduce emissions around the world. Hopefully that's all it is a political move, but it's difficult to convince our customers around the world and consumers around the world to make long-term obligations to LNG. You don't just decide 1 year to use LNG and the next year to go back to coal. You have to make big long-term obligations on the capital side to use LNG. And so it is pretty damning when our administration makes it unclear about whether or not we really are serious about continuing to provide our allies with natural gas around the world.
So, Alan, unlike Alex, I am not an expert on energy, but my layperson understanding is, natural gas versus coal versus burning oil, that's a pretty good trade anywhere. So what is the opposition? What are some of the key arguments for the opposition to LNG?
Yeah, the two primary arguments have been out there is one is fugitive methane emissions, and the second is what people perceive to be stranded assets, assuming that down the road we come up with lower cost, better technologies as a way to replace spinning reserve power generation capacity around the world, and things like steel making, fertilizer, all the things that we use natural gas for. So to the degree that we come up with a better solution, people are concerned that, wow, why are we spending all this capital on this now when we're going to come up with better technology? But here's the struggle with that second argument. In 22 and again in 23, we hit record levels of coal consumption around the world. Here in the U.S., coal is 2.3 times more CO2 emissions than natural gas. So, but the first issue I mentioned was fugitive methane emissions, and the IEA. So this isn't the U.S. government. This is the IEA, the International Energy Administration, just came out with their fugitive methane or their methane emissions report for 22. It takes a long time to compile all that information, but in 22, natural gas was only 6% of the total methane emissions throughout the world. Coal was 7%, and oil was 8%. So even when it is the product we're moving, primarily natural gas, methane is primarily natural gas. Even with that, we're still the lowest amongst the fossil fuels of fugitive methane emissions, and in total, only 21% of the total methane emissions around the world are coming from fossil fuels. So we are doing a lot to reduce methane emissions. Great players like Cheniere on the LNG front and like EQT on the natural gas production front are making huge strides in reducing emissions around fugitive methane emissions. So it's not rocket science. It's not that hard to reduce fugitive methane emissions, and we're taking it down very rapidly across the industry.
So if I also just look at the idea, and I realize your pipeline, right? But just in terms of the export issue, it is hard to think about why would I approve a project now that will be there for decades when in theory, in decades, we should be all using solar and wind. What's the argument against that?
Yeah, great question, Alex. Well, first of all, we have to have backup to our renewable power. We don't have that today. The reserve capacity available from wind is 10 to 30%. In other words, you can only count on 10 to 30% of that capacity. And as we all know, there are plenty of times, obviously, when the sun isn't shining, but there's also a lot of times when the wind isn't blowing, and there's longer periods of time. So we're talking about batteries today that are 4 hours, and frankly, we just don't have the materials to be able to even build out that. But 4 hours is not anything I think people want to depend on, that the wind's going to start blowing again in 4 hours.
And even for the next 40 years, Alan? Like in 40 years, same problem?
Listen, if we come up with a better solution, fantastic. Like these are commercial contracts that are being made. It's not like the government or the public is the one that is stranding the assets here. These are private investments. They're not subsidized investments. And so if we're wrong about that and we come up with solutions that are affordable and cleaner, then great. We'll move ahead as a society and we'll move on. But to deny the ability to reduce emissions right here, right now, while we continue to grow coal use around the world, and the U.S. is and can be the low-cost exporter of natural gas around the world, really just doesn't make any sense, because it is right. We continuing to grow emissions around the world, unfortunately.
Yeah.
And coal generation is one of the primary reasons. And so we're not against coming up. In fact, we're investing in all kinds of new technologies ourselves, but they're not there today at scale to reduce emissions the way that natural gas can reduce emissions.
Alan, we really appreciate you taking the time. I know it's a really busy day for you. I think energy literacy is so important. So thank you so much. Alan Armstrong, President and CEO of Williams. Also, we'll get you back after your earnings. And this is kind of the point, Paul, is that everyone can be right. I don't understand why this issue becomes so black and white sometimes, because it's very difficult. This is going to be very difficult. And you look at a country like India, right? You're going to put a bunch of solar panels. Like, I mean, how are you going to power that country? Coal, right? So what are different options aside from coal? Having that conversation is quite interesting.
Yeah, absolutely. And I mean, we saw it with,
I think it's cool.
with the Russia-Ukraine.
Yes.
Boy, we need alternative energy sources, and gas was a big one. So we'll have to see how that plays out. So they have their investor meeting tomorrow with our news in New York City. Here's Michael Barr.
Thank you very much, Paul. Alex, John, the National Weather Service issued a winter storm warning across the Northeast and New England. Bloomberg meteorologist Rob Carolyn has more on the New York City area.
Michael, the tri-state area is under a winter storm warning through 6 p.m. this evening. This will be the biggest storm we've seen in the city in over 2 years. Snow heavy at times. It'll taper off by about 4 o'clock this afternoon. We'll start to clear towards sunset. The city sees 6 to 9 inches of snow from the storm. We'll find about 4 to 8 inches in the suburbs off to the north and to the west. Temperatures are going to be around 35. We'll clear things out tonight, but temperatures will fall back to 30, so you're going to want to clear this heavy, wet snow up. Otherwise, it'll freeze up solid overnight. Michael?
Thank you very much, Rob. The New York City area, they've urged residents to stay home. It's special election day in New York's 3rd Congressional District. Voters in Queens and Long Island will decide who should fill expelled former Representative George Santos' seat. People for either Democrat Tom Suozzi or Republican Mazi Pilip will have to get to the polls in the winter storm. Speaking at a campaign event in Franklin Square, Long Island, Pilip encouraged people to still head to the polls today.
It doesn't matter if it's going to rain or snow. We're going to safely will go out. We're going to encourage people safely to go to vote, because we're talking about saving our country.
Suozzi spoke at a campaign event in Glen Cove, Long Island.
It'll affect the Democrats and the Republicans the same. There's some stories about how Republicans show up early and Democrats show up later, and the weather's going to be worse in the morning than it is in the afternoon, so that would be good for us. But who knows?
Early voting ended Sunday. Senate Democrats and Republicans joined together this morning to pass a $95 billion national security package that includes aid for Ukraine, Israel, and Taiwan. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. From this Bloomberg Business Flash, the inflation data that's in the driver's seat for markets today, measure of household costs, topping forecast for the month of January. So that casts down on a further slowdown in inflation. Consumer price data also suggested the Federal Reserve is going to take its time cutting interest rates. And that today has the stocks selling off, all the major averages down just over 1% at this point. Treasury yields, they are surging. Robert Tripp at PGIM says of the inflation print today, the Fed would like to see a better number, but you know what? He says this isn't that terrible.
The Fed is monitoring the reality, and the growth is really solid. The inflation is more of a last mile phenomena, where that last mile of getting down to target after rapid deceleration is proving to be a little bit chewy.
So you have all 11 major industry groups in the S&P 500 lower right now. After their earnings report, Ecolab shares, they are up 8.6%. That actually is the best performing stock in the S&P 500 today. The S&P 500 overall 52 points lower, down 1%, 49.68 on the index. Dow Jones Industrial Average is down 410 points. That's down just over 1%. The NASDAQ 100, 206 points lower. That's down about 1.2%. Two-year yield, 12 basis points higher. That is at 460. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, Ken Fellio, our global technical director, he lives out in way out in northwest Jersey. You go out on Route 80 west and you just keep going. He's somewhere out there. Anyway, he shows a picture of his house. He's got a ton of snow.
Yeah.
So that's serious. I was, there's no snow in the streets of the city here. I guess it just melts. But out in the burbs, out in western Jersey.
Also, we do snow here. We don't do rain, but we can do snow.
Yes.
We got the plows out. We're good.
Now, remember, in the city streets, what's underneath the city streets? You have these steam pipes.
Alligators.
From
the sewers.
Rats.
Alligators in the sewers.
I'm trying to make a point here. No, there's steam pipes from Con Edison, the utility here in New York City. Because a lot of buildings, there's so many densely packed buildings, they don't have boilers because having a big boiler sometimes is dangerous. So it's easier, cheaper to have the utility shoot in the steam under the street.
I feel like sometimes he could say anything. We'd be like, interesting.
Well, it's fascinating.
Maybe
You look it up,
the
you're
aliens
like,
under
he made
the
that
sidewalk.
up. No, that's true.
All right, let's see what's happening out there with the weather here. We want to stay on top of it. Brian Sullivan, Bloomberg weather reporter, joins us. Brian, what's going on? What should the folks in the greater New York City area be thinking about for the rest of the day?
So in New York, you might pick up a few more inches in the city itself. The big winners seem to be Orange County and Westchester. Peekskill got around 10 or so, and then out by Middleton, they got over a foot. So that's where the big action is. But it's going to be tapering off in the next couple hours.
What about in Boston?
Boston's not so bad. I mean, I'm looking out the window now, and I can see just a little bit of snow on the tree outside. We were supposed to get hit with a lot. There's a lot of angry parents up here because all the school departments closed school, and it's really not worth it.
Really not worth it. Yeah, angry. You don't want to cancel school, and then there's no snow because the parents are like, what?
Yeah, totally.
That's not good.
That's happening in my house right now. Although at least here we have some snow. All right, Brian Sullivan, thank you very much. Bloomberg weather reporter joining us there. Okay, let's go to some earnings. Marriott apparently beat estimates. Solid demand at its international hotels. The stock is down, but it's a really tough tape. Jody Laurie joins us. She covers all things from the credit perspective. She's a Bloomberg Intelligence senior credit analyst. What did you make of the numbers?
That is a great question, Alex. I think that Marriott is a solid performer within the sector. They've brought down leverage. We're sort of seeing the beginnings of this normalization from pandemic environment. And by that, we mean there was this massive surge, and now we're starting to see it be more of this standard sort of operating time period. That said, there are positive situations going on within the company. To name it, MGM, the relationship there is starting to develop, and they talked a little bit about that. They're starting to see growth in specific areas. most importantly, the mid-tier, which I think is a big portion of their growth development as well as for Hilton.
What are the hotel companies like Marriott, like Hilton, what are they saying about the leisure travel versus business travel in relative to kind of pre-pandemic levels?
Paul, I think it's a little bit mixed in that environment. You know, for the leisure side, they're definitely still seeing an influx, and I think it depends on the region. There's a bit of an investment in the Caribbean and Mexico, which fits in line with our U.S. travel survey that we did a few weeks ago. And those were, you know, main areas overseas that people are considering going from the U.S. in terms of vacation. From the business perspective, they talked about there's a difference between the smaller corporate groups as well as the larger corporate groups, at least for Marriott, that they saw the smaller groups are very strong. The larger ones are coming back, but aren't yet back to pre-pandemic levels. Now, for Hilton, what was interesting was they gave an anecdote on their call a few weeks ago saying that they weren't able to find rooms for their own personal use, meaning for their corporate retreats in some of their locations because demand was so strong. I think what's interesting is that we're seeing pocketed demand. You know, Las Vegas is a great example of a spot that we're seeing tremendous demand at the moment. And you know, and so I think that that's analogous for what we're seeing across the board is that certain regions are doing very well, others maybe a little less so, and we might see that play out in 24.
Well, speaking of, we get MGM, right? After the closing bell today,
Yep.
right? Well, what are you
Yep.
looking for?
For MGM, it's a mix of things. I mean, from the credit perspective, it's a frustrating story because they have so much going on that's a multi-year expansion effort, right? So we don't see the cash flows from that now. All we see is cash outlays. And it's a company that took so much of their debt and they were able to pay down their debt, but they replaced it with operating leases, right? So you have this very frustrating scenario where you say, okay, they're doing all these growthy sort of things that I think from an equity perspective might be very beneficial, although I'm not an equity analyst. Brian Egger can talk to that. But from a bondholder perspective, you say, okay, I don't really know what to make of this because in a few years from now, it could be very strong from a cash flow standpoint. But for right now, I'm just watching you spend money.
Yeah, I mean, I'm looking at the leverage here. They have $30 billion of debt. I've got an EBITDA number, I don't know, $4.5 billion. That's a lot of leverage. I know people like you, you're not comfortable with that.
Right, exactly. And if you talk to management, I mean, they say that the operating leases are a much preferred sort of structure for them. You know, they compare themselves to the retail companies that have weaker lease environments than they do. And so from that perspective, they're much stronger. But then you compare them to Wynn and what Wynn did in terms of their sale leaseback, and their terms were a little bit more favorable for Encore Boston. That said, MGM has a lot going on. I mean, they have the Osaka project, they have the push into New York, which now we're seeing Penn Gaming is going into there with ESPN Bets. I mean, that's obviously the online platform, but they, you know, today are taking over the license from Wynn. And then, you know, we also have beyond New York and Osaka, we just have BetMGM and we have all the effects of the tailwinds that we just saw. And I think the next question is going to be what is next in the MGM horizon, at least for this year as well as in the following years. And I think a lot of the story is going to be around the development that they're doing right now.
Right, which isn't what wait, didn't you say that like what's good for credit, bad for equity? So it's the opposite, right? Development, bad for credit, so then therefore the equity should do well.
Right. Yeah. I mean, you know, I think you could probably make some sort of correlation there. I think the, you know, from a credit perspective, you wouldn't necessarily say that CapEx is per se bad. You wouldn't say that M&A is per se bad in general. But you will say that obviously if they're doing it at the expense of bondholders, that can be negative. It's better that than spending on shareholders, which MGM did pull back in terms of their dividends. They're trying to be a little bit more flexible about when they try to give back to shareholders. Now you compare that to Marriott, which obviously very different environment because they're much higher rated.
Yep.
They have the flexibility from a cash perspective, but they are planning on spending over $15 billion between 2023 and 25 in terms of share buybacks and CapEx. So pretty sizable amount for Marriott too.
Hey, Jody, thanks so much for joining us. Always appreciate getting your thoughts. Jody Lurie, senior credit analyst for Bloomberg Intelligence. She follows all the fun stuff like hotels and casinos and cruise ships. She was actually on like the Icon of the Seas, posting that on social media.
We were really in the wrong gig, man.
We are in the
We're
wrong
going to
gig.
Newark, though, in a couple weeks.
We're going to Newark to NJIT. How good is that? S&P 500 off 1%, cleaning back some of the losses from earlier.
your company news headlines on Bloomberg Radio.
And I'm John Tucker in the studio with a look at some of the stories we're following related to companies. Well, he's back. Carl Icahn Investments in JetBlue Airways and American Electric Power. Kind of clear indications that the renowned activist moving on from his bruising tussle with a short seller last year. These stakes fit a classic playbook that turned Icahn into a billionaire in the first place. So you zero in on a company, try to acquire or gain control of it, and then sell off the assets or the business itself. They also mark Icahn's first publicly announced positions since his firm, Icahn Enterprises, was accused by Hindenburg Research in 2023 of being over-leveraged and overvalued. Hindenburg reports at one point knocked more than $2 billion off the net worth of Carl Icahn. Standard Chartered considering restructuring its institutional banking arm. So this is the unit that houses the firm's investment bankers and their traders. It's all part of the latest effort there by the CEO, Bill Winters, to improve the lender's returns. Well, they've been weighing options, including separating the investment bank from its corporate and commercial banking operations. Molson Coors spent more on marketing its core brands during competitor Anheuser-Busch InBev's Bud Light marketing disaster. It looks like it's worked. According to the company's fourth quarter results anyway, Molson Coors announcing earnings that beat the average estimate for earnings as well as net sales. Now, companies don't call out competitors by name in earnings releases, but Molson touted that it was well positioned to benefit from the significant shifts in consumer purchasing habits. This all goes back to the problems with Bud Light. And that is a look at some of your company news. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
I'm Alex Steele here. Happy afternoon, snowy afternoon right here in New York. I'm alongside Paul Sweeney. You're listening to Bloomberg Intelligence, where we have our top analysts covering 2,000 companies in 130 industries all across the world. Right now, let's go to Michael Barr for world and national news.
Thank you very much, Alex. Paul, John, today's commute's been a mess as the National Weather Service has issued a winter storm warning across the Northeast and New England. A nor'easter is poised to dump up to 6 to 9 inches of snow just on New York City alone, forcing schools to go to remote learning if it works. In New York's Hudson Valley, Rhinebeck Mayor Gary Bassett says crews had to alter the road plan because of unusual weather patterns.
We'd like to brine for storms in advance to get that salt base down, but that salt has to go down on dry pavement. The roads are wet because we had Saturday 60 degrees.
Government offices and schools are closed for the day. Senate Democrats and Republicans voted early this morning to pass a $95 billion bill, a national security package that includes aid for Ukraine, Israel, and Taiwan. Senate Majority Leader Chuck Schumer.
Today we witnessed one of the most historic and consequential bills to have ever passed the Senate.
The 70 to 29 votes coming after several Republicans spent hours filibustering the package on the Senate floor. The bill now heads to the House, where it faces an uncertain future. The Republican-controlled House is set to vote again on whether to impeach Homeland Security Secretary Alejandro Mayorkas. They're planning a vote for this evening after last week's attempt fell just one vote short. Republican Majority Leader Steve Scalise missed that session. He is expected to attend today. Greg Valliere, Chief U.S. Policy Strategist at AGF Investments, tells Bloomberg, though, this is a futile exercise.
This is a total waste of time. It would never succeed. Even if it made it in the House, the Senate would never approve impeaching and convicting him. So I think, again, a waste of time. There are so many issues right now that need to be addressed. To spend time on this, to me, is frivolous.
Greg Valliere at AGF Investments. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. On this Mardi Gras, Fat Tuesday, Punchki Day in the Detroit area. You know what I'm talking about. Yes, this is it. It's the best jelly donut that you've ever had.
Oh, that's right. You told me about that. Okay.
Yeah. You can see I started 4 years ago.
Yes.
And it was king cake. It is a traditional Mardi Gras cake. It's king cake.
King cake. Okay.
King cake, yeah.
Right.
It's just like, here's your sugar, and you should just eat it all.
Good.
Yeah,
See, that's the plan.
that's the plan.
This is Bloomberg, folks.
All right, Michael Barr, thank you so much. We appreciate it. I tell you, you know how we love that Dream Mall across the river in New Jersey? It's not doing too well. I mean, municipal bonds issued to finance the American Dream Mega Mall that are backed by New Jersey Economic Development grants didn't make their February interest payment. That's according to a securities filing. It was the fourth straight semi-annual interest payment missed on the $287 million in debt, which is backed by grants tied to sales tax collections at the mall. Bondholders have been waiting for the state of New Jersey to certify a key document necessary to appropriate grants for the payment. And the problem is, they built this huge, awesome mega mall in, as Bruce would call it, the swamps of Jersey. And it's close to New York City, but it's brutal to get to. It's not a particularly nice area. And as a New Jersey native, when I saw the plans for this, I just shook my head and said no. But they went ahead and did it, and they sold municipal bonds. And thanks to the people like Joe Misek, who keep on reporting on this, the bonds haven't been doing well.
So that's my question. Is this a reflection of the economy? Like no one wants to spend that much? Or is this like, I don't want to go to New Jersey to spend?
This is the project. This is the project. Now, they have this cool indoor rides and stuff like that, including an indoor like ski hill to attract people. Still, yeah, it's a pain to get to. It's a pain to park, and it's in
there are no hotels around, right? So you can't like make a weekend out of it.
No. Anyway, it's just a tough concept in a tough retail environment. Oh yeah, we had a pandemic too. So all of those things, really tough headwinds against this thing. So again, there's going to be some restructuring, it looks like, of some of those bonds there. So we'll stay on top of that, the Dream Mall. Balance of Power, Joe Matthew from Washington, D.C. That starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Prices defy gravity again, and the Senate actually gets something done. Welcome to the fastest show in politics on this CPI day, with a hotter-than-expected reading that cannot be making anyone at the White House feel great today, even after the Senate stayed up all night working to pass the emergency funding bill for Ukraine, Israel, and Taiwan. We're going to consider the staying power of both of these stories with insights on the data from Bloomberg Economics' Molly Smith. She'll join from New York, and analysis from our signature panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us this hour. House Republicans are demanding transcripts and recordings from Joe Biden's interview with the special counsel. We'll talk more about the age problem with Bloomberg opinion columnist Nia Malika Henderson. It's all after a look at Wall Street. We'll start there right now with Charlie Pellet in New York. Hey, Charlie.
Well, hello there, Joe Matthew. We have got the Dow, the S&P, NASDAQ very much in the red. We are off session lows, but still looking at a 450-point drop right now for the Dow Jones Industrial Average, back at 38,352, a decline now of just about 1.1%. S&P at 49.63, down 58 points right now. That is a drop of 1.2%. NASDAQ down 225 points, a decline there of 1.4%. The 10-year now at 4.27%, with the 2-year 4.60%. Wall Street got a reality check this morning with hotter than estimated inflation data, triggering a slide in both stocks and bonds. Spot gold down $25 the ounce to $19.94, drop there of 1.2%. Crude now surging up 1.2%, $77.86 a barrel. So where does this morning's CPI data leave the Federal Reserve? Jay Bryson is chief economist at Wells Fargo Bank. He was interviewed this morning on surveillance.
The Fed is not going to make a decision based on one data point. They're going to take the totality of the data and they're going to look at it when they make a decision. Now, is a rate cut going to happen in March? Knowing what I know right now, probably not. But May is still a long way away. We still have a long data between now and May, and we'll see how the whole totality of the data pan out between now and then.
And can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Avis budget shares plunging after the car rental company's fourth quarter revenue missed the average analyst estimate. On top of that, inflation data showed the cost of vehicle maintenance and repair rose and prices of used cars dropped, both bad news for the company and its peer Hertz. Right now, we have got shares of Avis, which uses the ticker CAR as in car, down 21.3%. Rival Hertz down now by 12.7%. Recapping stocks lower across the board, S&P now down 57 points, drop there of 1.1%. I'm Charlie Pellet in New York. Back we go to Washington once again. Here's your host, Joe Matthew.
All right, Charlie, we thank you. Obviously, inflation top of mind here. CPI Day. Welcome to the Fat Tuesday edition of Bloomberg's Balance of Power. It is Fat Tuesday. If you look at this report, U.S. consumer prices jumping the start of the year, stalling the disinflation progress, likely delaying the Fed rate cuts. And this is not what they were looking to hear at the White House. Joe Biden already has enough to deal with the age issue, and we're going to talk to Nia Malika Henderson about that coming up here. Welcome again to Balance of Power on the radio. On YouTube, search Bloomberg Global News if you want to find us right now. The cameras are lit from Washington to New York, and of course on the satellite as we add the voice of Molly Smith. I've been looking forward to hearing from Molly because everyone's been freaking out since 8:30 this morning, and for their own reasons. Molly doesn't freak out, though. She just reviews the data. Bloomberg economics editor. It's good to see you, Molly. This is like, one of the big days, of course, for you, CPI Day. Is the reporting fair? I guess I'll start with, is the headline justifying what's underneath the hood here when it comes to the data, or vice versa?
I mean, I hope so, considering I wrote the headline, so I would hope that it pans out well.
Let's transcend the terminal just for a minute, though. I mean, the consensus headline, the way the market's looking at this, the way that it's being told everywhere.
Totally, yeah, I was just making a joke there. But yeah, I mean, I think that, of course, you're going to see alarm bells go off when every number across the board is higher than forecast, and stocks are going to plummet. And a lot of red on the screen today, as we just heard. So that is going to be the natural reaction. But I think once you take some time to parse through the panic, digest a little bit, that a lot of economists who I've read their research coming out after this report don't seem to be too panicked. We have known for a while that the path to disinflation, to getting to that magic 2% number, is going to be long and bumpy. Those are the words that keep coming up. So I think today just really puts emphasis on that. Hey, maybe it's even longer and bumpier than we would have expected, but it doesn't seem to really change the prevailing narrative that inflation is coming down.
So everyone calm down is what I thought maybe you would say. And that kind of sounds like what you're saying.
Yeah, exactly. And I think, Jay Bryson said it really well on Bloomberg TV earlier as well, that this is just 1 month of data. The Fed is never going to look at that in isolation, and that it's really about the totality of the readings they're getting. And again, this also is not their preferred inflation metric. They look at a different one that comes out from the Commerce Department. We'll see that later this month. And the CPI does have some impact on that other report that's called the PCE, stands for Personal Consumption Expenditures Price Index. But that one is probably not going to be nearly as hot as the CPI was, mostly because a lot of the categories in the CPI that showed that strength are either not weighted as heavily in the PCE, or they're computed separate, like in a totally different way altogether. So that's really more the number to be looking at later this month.
So when you were at your desk, you're at your terminal, it's 8:30 this morning, was there anything that jumped out? You're like, oh boy, actually that's not good. Was it shelter costs? Was there anything in here that might be a red flag that the White House is extra worried about today?
Yeah, shelter, obviously a big one, like you just mentioned. Also the car insurance and medical insurance, those ones were big. And these are things that people relate to. These are things that you see on your bills and that you feel very much in your everyday lives. So that was very concerning, not such great news for the consumer there. And then where there were areas of relief, which, is obviously good to see that it's coming down in used cars, in broader goods prices, energy as well. That's obviously great and welcomed by consumers. The Fed, however, less so, because that's really where so much of the progress has been happening. And it's a bit too concentrated. They want to see more broader disinflation, and that's really just hasn't been the case yet.
Am I allowed to ask you about the Fed, or you, like the White House, you defer to the Fed on interest rates?
Oh, no. That we
looks
have
like
different
the
mandates.
Markets. Yeah, I believe that. Is that the market's getting ahead of itself, arguably already? Is this a little more realistic here as we move on to July?
I mean, I think this was kind of the data point that markets really needed to fully kind of, at this point, more or less price out the odds of a rate cut happening in March, which, you know, Powell really did a good job at the last Fed meeting and that 60 Minutes interview recently of tamping down those expectations, and all the other Fed speakers who we've heard one. I think this one really was more the nail in the coffin on that March is not going to happen. And you know, May would be then the next conceivable meeting. But hey, it's February, it's snowing in New York. There's a long time before May right now. So it's just too soon to know.
Yeah, here. Thank you for tempering everyone's freak out today, Molly. This is why we have you here. It's ugly out there, though. The Dow's down almost 500 points. Maybe it'll feel different tomorrow. Next big stop on the road before you leave us, Molly, is a consumer sentiment on Friday. What's got your attention?
That one's been trending a lot better lately, you know, because inflation has been coming down. You know, this will be too soon to get this latest inflation reading factored into that report. So don't think it'll have much bearing on that narrative. But again, like, consumers are just so sensitive to gas prices, really. And that's what, at least in the University of Michigan Sentiment Index, that's the one we're getting on Friday. That has a huge bearing on how people feel about inflation expectations and their overall financial health. So we'll just have to see how that one comes in.
Cool, great. We thought we'd bring you to the source today. Molly Smith, editor at Bloomberg Economics. You can find her work on the terminal and at Bloomberg.com. Love hanging out with Molly. We appreciate it, Molly, on a busy CPI day. As we add the voice now of Nia Malika Henderson. Speaking of looking forward to this conversation, I always am. Bloomberg opinion columnist. We've pulled her onto Balance of Power now for her second appearance. I'm so happy you're in the Washington Bureau here because your finger's always on it. And I want to ask you about your column about the age problem.
Yeah.
Nia, it's great to see you. First, though, this CPI is a big deal for this White House, and not in a good way. You know, Joe Biden's been pretty good about applauding strong economic data, but when it gets to be good news on Main Street, bad news on Wall Street, sometimes you can't even tell anymore because prices are one of the biggest problems that voters have with them.
Yeah, listen, I was down in South Carolina talking to voters about the Democratic primary supporting Joe Biden. Their big concern was prices, right? Rent prices, egg prices, gas prices. And so you see those concerns. There was a time, a short window ago, where there seemed to be kind of optimism about the economy. Things were looking up. You saw the unemployment numbers. Those were better last go around. But listen, I mean, these are sort of the day-to-day realities that people feel and experience, right? People don't experience the unemployment number, right? They experience how much does it cost to buy a bag of groceries at the Piggly Wiggly. And so it's a real drag, I think, if you're thinking about Joe Biden and running on his accomplishments, running on a stronger economy, they've got some challenges.
Well, if we get another leg up in inflation, certainly the timing would be horrible. Just as the White House gets ready to celebrate soft landing, maybe this thing heats up again, which, you know, I guess could be good for some in terms of wages and so forth, but not good for the inflation narrative. When you add it to what you're writing about, we've got some problems. When you add the border, we've got 3 problems there, and we can get to all of them. The Biden age question is an important one, and your column is great. Biden's team can't ignore his age problem is the headline. And I want to get to your solutions here because I think you want him to embrace it. But, you know, Jon Stewart came back to the Daily Show last night. And you know it was one of the first issues he grabbed onto. For our listeners and viewers on YouTube, here's Jon Stewart back at the desk.
We have 2 candidates who are
Did we lose him? But listen, he was joking about the age thing.
Right.
Walk with me, as you are. And I find it interesting here because I think a lot of folks look back at that news conference last Friday as a turning point, potentially, not for the better, at that news conference he held late at night in the White House. It's brought it from something that Democrats have been talking about, maybe quietly, to something we're talking about out loud now. And you say, go for it, embrace it, be Dark Brandon. How does he do that?
Yeah, listen, I think you saw a glimpse of it a bit. He was in front of a group, I think it was like legislatures or something like that, and he was sort of joking about his age. He said something like, listen, I've been around a long time. I do actually remember that, and the crowd laughed. I think moments like that sort of hang a lantern on his problem. Everybody knows this is a problem. Democrats have sort of privately talked about it and privately counseled the White House to address it more. I think one of the things he can do, too, is show that he has a big expert team. I was remembering Donald Trump, who used to have those big cabinet meetings that would be partly televised. You know, the folks from TV would go in and see, you know, maybe the top 5 minutes of it. Everyone would go around and sort of obsequiously praise Donald Trump. Joe Biden doesn't necessarily need that, but that kind of show of force, I think, telegraphs to the American people and voters that, A, he's got a strong team. The team that he does have sees him as a leader and looks to him for guidance.
Sure.
So I think things like that would go a long way. The other thing is just get him out there more. This is clearly a White House that is nervous about putting the president out there.
Is it true that he wants to get out more?
You know,
and he's got reins on him?
You know, there's always this tension with White Houses, right? The principal typically says they want to get out more, but they're being, you know, sort of held back by other folks. Hard to believe, though, right? You're the president of the United States.
Listen,
you're the leader of the free world.
That's what they get paid for.
Yeah, exactly. So, listen, I think putting him out there more would actually lessen the sort of attention and scrutiny that he gets, because he doesn't do the kind of frequent press conferences that we've seen from former presidents. He passed up on the Super Bowl this last Sunday. They should have probably put him out there. That's usually sort of a soft interview in some ways, and puts the president, I think, in a light that he needs to be seen in. The thing about this president is he clearly has some memory lapses here and there. You saw him confuse the president of Mexico and the president of Egypt. I think he was thinking border. And so, but he also knows his stuff, right? I mean, he can go into detail about very complex foreign policy
Well, that particular
matters.
gaffe was actually the end of a fairly eloquent answer on a totally unrelated topic, but nobody's going to remember that.
Yeah.
Nobody seems to remember Donald Trump's gaffes either, or maybe just nobody cares when you're confusing Nikki Haley with Nancy Pelosi or pointing to the wrong. This happens a lot for him as well. Is part of embracing this also reminding people of Donald Trump's age?
I think it's a small part of it, right? Because the reality is that if you look at polling, voters aren't as concerned about Donald Trump's age and mental capacity as they are about Biden's. There is concern there. It's like 48% for Trump, and something like 76% of voters are concerned about that for Biden. But there is a different sort of presentation, I think, if you look at Donald Trump compared to Joe Biden. Joe Biden just frankly looks a little older, and he's only 3 years older, but he looks a little bit frailer, and it's partly because he's thinner than Donald Trump. Donald Trump, I'm sure, eats a lot of McDonald's cheeseburgers, which
Proudly.
which are delicious. I'm a big fan of those cheeseburgers as well. And so it just hits different, as the kids like to say, in terms of the age factor. But yes, I think they should certainly do that. You know, part of the issue, I think, with Donald Trump is there are so many other things that voters see when they look at Donald Trump, right? He has problems with the truth. He has problems any number of things with January 6th and sounding like a wannabe dictator at times. So those are the concerns of Americans. Those are the concerns, I think, that the Biden administration is highlighting, with age kind of low on the list in terms of what voters are concerned about.
Yeah, it's just, I mean, look, it reminds us that we don't all age the same way. Look, Donald Trump has 4 years on Joe Biden. Maybe I should say that the other way around. And 4 years ago, Joe Biden was looking and sounding a lot different than he does now. Then you start wondering where they will both be 4 years from now. It's impossible to quantify, but this is why we have a problem. We talk about no labels. We talk about maybe a late swap here in the race. You're not allowing time for that, are you? These are the two guys.
Yeah, these are the two folks. Listen,
You can turn me around on that.
Yeah, I mean, there's all sort of fantasy scenarios,
There are a lot
right?
of them right
Gavin Newsom comes in to save the day
Michelle
out of
Obama. I hear
Michelle
about it every other
day.
Wouldn't
Right, on
she
Fox
like to know
News.
about that?
Yeah. You know, Kamala Harris, I think she just gave a recent interview saying that she's ready to serve. You know, Nikki Haley's staying in the race just in case something that happens with Donald Trump. But very likely these are going to be the people that Americans have to choose between in November. And one is 77, the other is 81. I think he actually might be 82 maybe by the time he's actually on the ballot. So it's something that Americans haven't faced before. It's not that Americans haven't had older presidents, and older presidents possibly with some sort of impairment, right? You think about, for instance, Woodrow Wilson, and then you think about
Even Ronald Reagan.
exactly, more recently. But those people weren't asking for 4 more years as they were dealing with those
It's
health
hugely important.
impairments.
We didn't have the 24/7 media cycle either.
Exactly.
Not to mention Friday night combative news conferences.
Right.
Nia Malika Henderson, what a pleasure. We're going to do this more often, I
Let's
hope.
do
Look
it.
for her columns at Bloomberg Opinion and at Bloomberg.com. I'm Joe Matthew in Washington. We're just getting started here on the fastest show in politics. Thanks for being with us on the radio, on the satellite, and YouTube. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet, 1221 on Wall Street, and a reality check this morning in the form of that CPI report. Hotter than estimated inflation data triggered a slide in both stocks and bonds. The 10-year right now, 4.28%. The 2-year, 4.61%. The Dow, the S&P, and NASDAQ very much in the red. We've got the S&P down 59 with the S&P 500 index back below 5,000, 49.62 right now on the S&P, down 1.2%. Dow Industrials also down 1.2%, lower by 457 points, while the NASDAQ Composite Index is down 232, a drop of 1.5%. 10-year yield 4.28%, 4.28%. The 2-year, 4.61%. Spot gold at $19.93 the ounce, down 1.3%, while West Texas Intermediate crude is up 1.5%, $78.10 a barrel on West Texas Intermediate crude. Bitcoin today down 2.5%, back below 50,000. Bitcoin right now at 48,590. NVIDIA's red-hot rally to start 2024 has Wall Street rushing to keep up, with at least 5 firms hiking price targets on the AI darling this month. UBS this week lifted its target to $850 from $580. Right now, NVIDIA is trading at $724. On a down day for the rest of the market, NVIDIA up now by 0.3%. Recapping stocks lower, S&P down 59, down 1.2%. I'm Charlie Pellet, and that Joe Matthew in Washington, as Balance of Power continues, is a Bloomberg Business Flash.
All right, Charlie, we thank you and welcome indeed to the Tuesday. Is it really only Tuesday? A lot's happened already this week. The Tuesday edition of Balance of Power, Fat Tuesday, with a hotter than expected CPI. And look at this, something that got done in the United States Senate. I'm as amazed as you are to wake up to the headline. They worked all night. They went through, it's almost 6 o'clock in the morning when it passed, 70 to 29. This is the National Security Supplemental, Emergency Supplemental Request, funding for Ukraine, for Israel and Taiwan. The question remains, what happens when it goes to the House? Because the Speaker preemptively said that this would never pass the House, and it doesn't appear that he even wants to bring it to the floor. So we'll find out about that. It's going to take a minute. Arriving in town in the middle of all of this is Maroš Šefčovič, Executive Vice President of the European Commission for the European Green Deal, Interinstitutional Relations and Foresight. How about that for a title? Mr. Vice President, welcome to Washington. How did I do with the pronouncer?
Absolutely perfect. Well, you're a great linguist.
This is all no one's ever said that before. Thank you. Welcome to the nation's capital. It's great to see you here. You're meeting with lawmakers, with members of the administration, with energy stakeholders here. And energy cooperation against the backdrop of this war in Ukraine is your priority here as you move from meeting to meeting. Do you worry about this debate here about funding Ukraine, about the U.S. potentially pulling back? What are you hearing as you have meetings around town?
Of course, we are following it very, very closely, and I know that these are difficult decisions to make, especially in the current political circumstances on both sides of the Atlantic. But we delivered. We just approved 50 billion euros for Ukraine. So altogether, our assistance so far is 150 billion euros, which is, I would say, at this stage twice as high as the American one, even though we, of course, clearly know that without US, especially the military supplies, the situation in Ukraine would be very, very dramatic. So we clearly been kind of pleading, hoping, and arguing that how the U.S. component of this assistance is absolutely crucial. If the Ukrainians need help sometime, it's now, and I hope that both of us will deliver and will help Ukraine to defend itself.
Do European leaders believe it's just a matter of time for the U.S. to complete its debate and get this done, that it will eventually happen?
I mean, we've been really encouraged by very strong statements coming from the President Biden and from the White House, and also administration officials yesterday have been very clear that they want this to happen. Very much encouraged by the votes in the Senate. But of course, I know that this is not the last step in that process. But I mean, looking at what's happening in Ukraine, I think it's clear that it should be imperative to help them to get them the means to defend themselves, because they are also defending our set of values.
Well, you've got LNG on your agenda as well. You had an important meeting this morning, I know, with executives. I saw on Twitter you were meeting with President Biden's energy advisor, Amos Hochstein, who spent a lot of time with us here at Bloomberg talking about energy policy. What did he tell you about the administration's decision to halt LNG export approvals and its potential impact on Europe?
I think that also in my meetings yesterday with Amos and other top representatives of the administration, I was highlighting the fact that probably this is new for United States of America, but U.S. has really become the guarantor of the global energy security. So any statement coming from the Washington D.C. on the matter of LNG, on the matter of energy supplies, immediately has, I would say, kind of rippling effect all across the global markets. And therefore, I have to say that I was very pleased yesterday. I was reassured that this would not affect Europe in the coming couple of years, that by 2030, actually, the export capacity of US LNG sector should double, and that US will play this very important role, helping us to shift away from Russian fossil supplies, because without US LNG supplies, I mean, we would be in very, very tough place. Anyway, we've been in the worst energy crisis since 70s over the last 2 years. So for us, it's of course extremely important. And if you look a little bit beyond Europe, and therefore my underscoring of this global responsibility of the United States is the fact that I was working very closely with John Kerry in Dubai.
Yeah.
There is clear pledge to phase out coal. And if you look, that gas has only half of carbon intensity of coal. How much of the gas would be needed in India, in Southeast Asia, and all the places? So I think that clearly the LNG sector of the US would have, I would say, global role to play.
Is it safe to say then that the U.S. has provided you assurances when it comes to LNG supply while these reviews take place?
Yes, I was reassured yesterday by all my interlocutors, including in the discussion with Mr. John Podesta. On top of it, it was highlighted that there is also reference to eventuality and eventual situations of the emergency character. And we had very, very good dialogue with the administrations throughout the years since the war in Ukraine started. And I think that the fact that US LNG is now number one exporter to Europe is just proof that we found the solution, and 56 billion cubic meters came. It was even 6 billion about that political agreement which President Biden had with my boss, President von der Leyen. And of course, we hope for more in the future. So I was actually presenting to the LNG exporters how our common purchase of gas platform functions, how we're aggregating demand, how we are bringing new potential customers to them. And I was also highlighting that we are going to offer new product where the contracts up to 5 years would be now possible. And we are starting the market survey even on a longer term, up to 20 years, depending if that would be interesting for buyers in Europe and bidders in the States. And therefore, we just wanted to start the conversations with them.
So 5 years of security is what you're talking about here. That sounds like you get almost to 2030 when this would all be done in the U.S.
I think that when I was referring to the 5 years, I was referring to the contracts now the bidders could sign on the platform which we created for common purchase of gas. But I know that a lot of like trade is going also outside of the platform, and most of the bids which came from US LNG been well placed in Europe, and they supplied 56 billion cubic meters, which was very important because, just to give you one figure, before the war, we've been importing up to 150 billion cubic meters from Russia. Now we're down to 40, and we had to found new 100 billion cubic meters within the space of 1 year. So, I mean, you would appreciate how challenging that was. And we even had to curtail the consumption, lower some energy activity in energy-intensive industries. And of course, we want, again, to perform at our optimal potential if it comes to the European economy.
I have to ask you about stories that were reporting about Venture Global. What can you tell us about this ongoing dispute with Venture Global and the contracts that BP and Shell and some European companies say should start now?
Of course, I mean, it's very difficult for us to comment because I understand that it's under the litigation, so most probably there will be a court hearing and court eventually decision in that regard. So we haven't seen the contracts, and what is very important for us that also this situation settles as soon as possible, because we want also the long-term contracts which have been signed to be respected, and appropriate level of gas supplied to EU, because I am absolutely convinced that we are closest allies of the United States of America, and we go through a rough patch with two wars very close to our borders, with all the repercussions you might imagine.
You're aiming for carbon neutrality in 2050. The UN asks for 2040. What's the difference?
I think we, of course, the huge difference is that to become carbon neutral. I mean, Europe believes that we will be the first carbon neutral continent. I think the United States of America have the similar ambition, and it's no mean feat. It's extremely challenging, because I think we progress a lot with energy sector, but to kind of phase out fossil fuels for heating and cooling of the buildings, from transport, from aviation, it's a challenge. So therefore we are, I would say, carefully planning how this can be done. A lot would depend on the technological development, and therefore I was so thrilled when I visited MIT this weekend. I was on Saturday in the Fusion Lab, and I think that I saw the future, because I mean these guys, what they are doing there, it's pretty impressive. I'm glad that this is EU-US cooperation, that there are also European big companies investing in that venture, and that could bring us the clean energy we need.
Right. Fascinating conversation. He's the Executive Vice President of the European Commission for European Green Deal, Interinstitutional Relations and Foresight. I don't know how you fit it all on a business card, but we thank you. Manoj Shefčovič, great to see you in Washington. Get home safe. Good luck with your meetings.
Thank you for having us.
I'm Joe Matthew in the nation's capital, as we turn now to Nancy Lyons for World and National News. We'll do that in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The pressure is now on the House to approve the $95 billion foreign aid package for Ukraine, Israel, and Taiwan. The Senate passed the measure early this morning. The U.S. ambassador to NATO, Julianne Smith, tells Bloomberg there is no plan B.
We are prepared to pursue Plan A, and that is to secure congressional support for our friends in Ukraine. Let me be clear, this is a collective effort. We need the United States to do its part. We also will continue to ensure that our friends in Europe are doing their part.
Julianne Smith talking with Bloomberg's Anne-Marie Hordern. The funding measure faces an uncertain future in the House. Voters in New York's 3rd Congressional District are casting ballots today to see who will succeed Republican George Santos, who was expelled from the House. Tom Suozzi is the Democrat in the race. Mazi Pilip is the Republican. Polls show a very tight race between the two. Democrats see the seat as a crucial step in their plan to retake the House majority. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Bloomberg World Headquarters, I'm Charlie Pellet. It is a down Tuesday after the CPI report. Equities moving away from their records after the core consumer price index topped estimates and climbed the most in 8 months. Treasuries sold off. 2-year yields hitting the highest since before the December central bank pivot. Right now, we've got the 2-year yielding 4.61%, 10-year 4.28%. Stocks in the red right now. S&P lower by 56, a decline of 1.1%. Dow Industrials down 453, a decline of 1.2%, while NASDAQ is down 227, a drop right now of 1.4%. 10-year yield, as we mentioned, at 4.28%. Gold down $26 the ounce, down 1.3%. Back below 2,000 at $19.93 the ounce, while West Texas Intermediate crude up 1.6%, $78.15 for a barrel of West Texas Intermediate crude. There was surprising data on inflation this morning. It's going against the odds of the Federal Reserve soon cutting interest rates. And with more, here's Bloomberg's Vinny Del Giudice.
A measure of household costs, core CPI top forecast in January. That cast doubt on a further slowdown in U.S. inflation. Food, auto insurance, and medical costs posted notable gains. Housing, an inflation hotbed, contributed more than 2/3 of the overall increase. Fed officials want a broader slowdown before easing, with Fed Governor Michelle Bowman saying this week interest rates are in a good place. Vinny Del Giudice, Bloomberg Radio.
Hotel stocks are trading lower. Marriott International reported earnings this morning. The stock is now down by 6.3%. Rivals Hilton International down 3%. Hyatt down by 4.3%. Recapping stocks lower, S&P down 57, a drop there of 1.1%. Balance of power continues. Back we go once again. Here he is, Joe Matthew in Washington.
All right, Charlie Pellet, thank you. Welcome to the Tuesday edition of Balance of Power. On this same day that the Senate actually passed something. They stayed all night. That wasn't originally the plan, but they just decided to go for it, recess time and all that. Passing the National Security Supplemental 70-29 if you're playing along on your home game. Now, we know that this has been called DOA in the House by the Speaker. And you got to love Washington. He's out with what they were calling yesterday a preemptive rejection. Why wait for the bill to pass? Preemptively rejecting. Quote, in the absence of having received any single border policy change from the Senate, remembering Republicans didn't want the border deal attached, the House will have to continue to work on its own will on these matters. America deserves better than the Senate's status quo, unquote. $60 billion on the line for Ukraine, billions more for Israel and Taiwan. As we assembled our panel, Rick Davis and Jeannie Shanzano are with us. Glad to say, Bloomberg Politics contributors to help us make sense of it all. What do you think, Rick? It passed. It wasn't overwhelming, but it passed with a pretty good number here. Will it ever see the light of day now that it's gone through the Senate?
Yeah, I mean, I think you got to give it its due. If someone said a month ago that this was going to pass without Homeland Security, without border security attached to it by 70 votes in the Senate, you would have said, no way, that's not going to happen. Well, it happened, and that gives it enough impetus to be serious when it hits the House. And as you point out, Joe, I mean, I am very dizzy with the back and forth between the Speaker and the Majority Leader of the Senate. We're not going to take this without border security. Put on the border security. We're not going to take it with this border security. Take off the border security. We're not going to take it without border security. I mean, oh my God. I mean, is this the craziest debate you've ever seen? It lacks seriousness.
It's wacky. Aid for Ukraine has never been so close, in at least most recent stretch, Jeannie, or felt so far away at the same time. Will this lead to a new bill then potentially in the House or just a stalemate?
My vote is on a stalemate. Forgive me for being pessimistic, but when he comes out, and I love the phrase, the preemptive rejection, that's a great way to put it. Chris Murphy sent out a tweet last night, or an X last night, which really summarized it. And really, to Rick's point, he basically said the Speaker requested border security. We did that. We put it on. The Speaker said no deal. We took it off. We sent it back to him without that. And he said, no, wait a minute, we need border deal. And then Chris Murphy ended by saying W something F. And that is really where many of us find ourselves, because What is happening? You wanted it, you don't. And lost in this is the reality that this is money very much needed and very much supported, and even supported by some of the Republicans in the Senate who are now speaking out against it. At one point, at least, they supported it, like Lindsey Graham. So it is head scratching when you think about it. And I don't think this sees the light of day. I don't think a discharge petition is going to get this done.
Yeah, you mentioned Lindsey Graham. The goalposts keep moving here, Rick. It wasn't just the border component, and I'm still a little bit dizzy and confused from all of that. But now the idea is that this money should be in the form of a loan, maybe even a zero interest loan with no due date. Senator Graham parroting Donald Trump's idea here to say, quote, it should be a loan to the countries in question as suggested by President Trump. So we've just given up the ghost here on Senate or House leadership. Donald Trump is running Capitol Hill?
Well, he's certainly running the House. We've already come to that conclusion. That's one of the reasons you've had this kind of crazy reconsideration of all these debates. But I think there's still a fight going on in the Senate. The fact that this bill passed, with 22 Republican votes, indicated in the Senate that Mitch McConnell still has a voice. And he may be the last man standing in a voice against Donald Trump and this sort of haphazard foreign policy, national security. Lindsey Graham caved under the pressure of Donald Trump saying, nope, it's got to be my way or the highway, invented this new loan program. And it's just a complete non-starter on Capitol Hill. And it's shocking and surprising to me, frankly, that someone with the stature that Lindsey Graham has would ape the Donald Trump line so quickly.
Yeah, how about that? Well, look, we've got a lot of experience here in Rick and Jeannie, and nobody seems to know exactly where this is going to go in the House. We do know there will be an impeachment vote later on today. Alejandro Mayorkas up for round 2. Remember the first one failed? Al Green, we talked to him from his hospital bed. High drama. I don't know if that's going to be possible this time around, Jeannie. And if the House does impeach Secretary Mayorkas, what does that mean for the future of any border deal happening?
A border deal this year is simply off the table because the Republicans who asked for it decided they didn't want it when Donald Trump told them they couldn't do it. And that's the reality. They probably will get Mayorkas impeached today, but that is a non-starter. That is dead on arrival in the Senate. It's not going to go anywhere. But it is just indicative of this do-nothing Congress except the political bidding of Donald Trump. And that is simply where we are today. This was disastrous. The first vote that Mike Johnson let them have on this, that they lost. And when they do get it, and they probably will today, it's equally as disastrous because all it's doing is, again, the bidding of Donald Trump and nothing for the American people. You don't impeach because you disagree with somebody's policy. What you do when you disagree is you win elections and get your own guy or woman in there.
William Belknap resigned moments before the impeachment vote, almost 150 years ago, Rick. That was Ulysses S. Grant's Secretary of War. He was going to be impeached over a kickback scheme involving government contracts. This has actually never happened. He resigned before the vote. Will this be the first in history?
I love your history lesson. Too bad this wasn't as spicy as that one. Yeah, I mean, look, I think if Secretary Mayorkas was reading the history in the tea leaves, I think he would just take himself out of this debate. He serves at the pleasure of the president. Obviously, the president doesn't want to fire him. He hasn't really done anything wrong as the president views it, but he is an impediment to frankly, the public thinking that Joe Biden has a border plan. I mean, he's spent politically, and I can't speak to the border policies and the leadership he has at the Homeland Security Department, but I think if I were the chief of staff at the White House, I'd be having an intimate conversation with Secretary Mayorkas about his future.
Wow. Rick Davis and Jeannie Shanzano. By the way, the majority leader, Steve Scalise, is back. So Mike Johnson thinks he's got the votes here. They better get it done before New York 3. That's happening today, of course. The vote to replace, to fill the seat left empty by George Santos. That could change the dynamic here. So the timing tonight is important. Whether that's a D or an R taking that seat will impact the gap later this week. We'll have more next with the panel. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Activist investor Carl Icahn has taken a 9.91% stake in JetBlue Airways, with plans to seek at least one spot on the board, aiming to boost shareholder value in the wake of that near collapse of the carrier's deal to buy Spirit Airways. Right now, we've got JetBlue on a down day for the rest of the market, surging now by 17%. Spirit shares, they are tumbling by 4.8%. AutoNation shares are down 2.6% after fourth quarter profit and sales expectations beat analysts' expectations. And with that story, here's Bloomberg's Dan Schwartzman.
Charlie, demand for new vehicles helped counter softness in the used end of the market. The auto retailer has been working to boost sales in the face of consumer affordability challenges and ballooning dealer stock. And as discounting has pressured margins at dealers, AutoNation Chief Executive Officer Mike Manley has focused on growing the company's repair, financing, and insurance units. Revenue from new car sales was $3.37 billion in the quarter, topping expectations, while used car sales of $1.91 billion fell short of estimates. Its parts and services business boosted revenue to $1.14 billion. Charlie.
And that's Dan Schwartzman reporting again. AutoNation shares, they are down now by 2.6%. Rival CarMax tumbling by 4.5%. JP Morgan Chase is reporting a position in Next Gen Energy. In the fourth quarter, it bought 2% of the company's outstanding stock. Molson Coors Beverage spent more on marketing its core brands during competitor Anheuser-Busch InBev Bud Light marketing mess, and it is working according to the company's fourth quarter results. Molson Coors shares are higher after it announced earnings that beat estimates. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Balance of Power with Joe Matthew on Bloomberg Radio.
It appears Donald Trump is not the only outside influence on Capitol Hill when it comes to funding for Ukraine, or at least the way that lawmakers are looking at this. As we find on the terminal, Elon Musk has told a group of Republican senators there is, quote, no way in hell, unquote, that Vladimir Putin could lose the war in Ukraine, weighing in on a conflict that has been, of course, affected by Musk's own Starlink satellite service. This is something that does impact him directly here. We want to talk about this with Max Chafkin, who's the Bloomberg Business Week senior reporter who knows all things Elon. Max, it's great to have you. How does Elon Musk have senators' ear on such an important geopolitical topic?
Well, I mean, Elon Musk has everyone's ear because, of course, he is, the world's richest man and also running Twitter, now called X. And so he has, over the last year or so, maybe a little more, really become, effectively like another right-wing talker. And he is, expressed opinions on all manner of things, including, as you say, the war in Ukraine. And during that time has, proceeded closer to the sort of far right wing of the Republican Party. So what you had on X Spaces yesterday was, a group of a couple of senators, Vivek Ramaswamy, former presidential candidate, David Sachs, who's a venture capitalist and Republican political donor, and of course Elon Musk, having a conversation that I think critics would say would be like somewhat Russia-friendly, somewhat more Russia-friendly than what the consensus U.S. policy view is.
Also on this session, Senators Ron Johnson, J.D. Vance, and Mike Lee. I guess these were not big fans of the idea of sending money to Ukraine to begin with, were they?
No, and they were sort of reiterating. J.D. Vance has been very vocal on this. They were basically reiterating their position, which is that this bill to send aid to Ukraine, as you say, as well as I think aid to Gaza and some money for the border, that this was a travesty. I mean, what's interesting here is that Elon Musk, as you say, has a financial interest here, and doing this, going out and saying, Ukraine has no chance of prevailing in this war, which I think lots of people would dispute, has implications for his dealings with the Defense Department. He is a major defense contractor, and he is definitely, going off message here as far as like U.S. policy is concerned.
What was the purpose of the session, by the way? There have been a couple of these. I remember the Ron DeSantis campaign launch that left a couple of us wondering what the point was.
Well, I mean, I think, it's the same purpose. As I said, he is essentially, you have to look at him essentially as a media figure, right? He's creating content, he's playing to his base. Like for Elon Musk, part of the idea here is to grow X, grow Twitter. And when I say grow, what I probably should say is, reverse what feels like what has been sort of a steep decline in the company's financial prospects. So, bringing in, a couple of, I don't know if prominent is quite the right word, but U.S. senators and, former presidential candidate, well-known figure like that is, a piece of content. And I think what's so bizarre about this from a sort of outside perspective is Elon Musk is in many ways operating like a talk radio host, but he is also a talk radio host who is a CEO of a company that is worth, a little less than $600 billion in Tesla and a major defense contractor in SpaceX.
All right, Max, I appreciate your time. Thanks for joining. Max Chafkin, Bloomberg Business Week senior reporter, helping us understand the impact of Elon Musk ever evolving here in the nation's capital. I'm Joe Matthew in Washington. Kaylee Lyons is on the way in next, and I know we missed our time with Rick and Jeannie. We will connect with our panel coming up next hour with a lot more to talk about here in Washington and in New York. It's Election Day in New York 3, and we'll hear from Rick and Jeannie on that next hour. Also, our conversation with Kyle Kondik at Sabato's Crystal Ball and Anna Wong from Bloomberg Economics. Hour 2 starts right now.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
Prices come in hotter than expected, and the Senate actually passed something. Dare to dream. Welcome to the fastest show in politics with an eye on both ends of Pennsylvania Avenue, from inflation here to funding the war in Ukraine. I'm Joe Matthew here on Bloomberg Radio and TV alongside Kaylee Lyons. And Kaylee, we've got another situation where we're spinning a couple of plates here, but it all comes back to the potential for Joe Biden to navigate this re-election campaign.
Absolutely. Of course, the inflation figures today not necessarily trending in a direction that would be helpful for the president from a voter perspective, considering we have 3.1% headline inflation year on year. That is not the two-handle that was expected or that the Federal Reserve is looking for. And as you're seeing the market start to push back expectations of when the Fed's going to cut, begs the question of how much the campaign was counting on things like mortgage rates moving lower as we get closer to November.
Yeah, that's true. Of course, expectations start moving back here, and expectations for funding in Ukraine have been slowed down quite a bit. I don't know where this is going, but they actually passed the bill. They worked all night, Kaylee. That wasn't necessarily in the cards, and the House has no plan to address this anytime soon.
Yeah, well, if you look at the statement that Speaker Mike Johnson released yesterday, he suggests that he would like to see more effort on the border, which of course was not included because the package that included the border was quickly killed by Republicans in the Senate and in the House. So that's just where we are right now. It seems a lot's going to be in Mike Johnson's hands.
Yeah, preemptive rejection. I got a kick out of it. It's like classic Washington speak. He came out with a statement before they passed the bill. Preemptive rejection. It reminds me of high school, Kaylee.
Yeah, and the all-nighter also kind of reminds me.
That's
maybe
very true.
less high school, more college, but they're working round the clock on Capitol Hill. Now the Senate's gone for
a sophomoric effort, you might say,
as a rest reward. Let's get back, though, to the inflation story because it definitely is moving financial markets today. Charlie Pellet is tracking that for us in New York. Charlie, it's not looking super pretty out there.
It is not. If you are long in the market, we have got the Dow, the S&P, NASDAQ, all very much in the red right now, making a run for the worst level of the day with the Dow now down by 513 points, a drop now of 1.3%. We've got the S&P 500 index lower by 66. That is a decline also of 1.3%. NASDAQ, the composite Index down 264, drop there of 1.7%. Bottom line here, we have got the S&P trading back below 5,000 on this CPI Tuesday. 10-year yield 4.28% with a 2-year now at 4.61%. Spot gold down $25 the ounce, a decline of 1.3%. The precious metal now at $19.94 the ounce, while West Texas Intermediate crude holding at $78.04, up by 1.5%. So the Dow, the S&P, NASDAQ very much in the red. Sources tell Bloomberg Paramount Global, which owns CBS Television, is letting go about 800 staffers days after the company's coverage of the Super Bowl set a record for the most watched program in American television history. Shares of Paramount, they are down now by 2.3%. Recapping stocks lower, S&P down 67, a drop right now of 1.3%. I'm Charlie Pelletin, New York. Balance of Power continues from Washington. Once again, Joe Matthew and Kaylee Limes.
Charlie Pellet with a look at the market reaction to today's inflation data. Thank you so much for joining us, both on Bloomberg Television and Bloomberg Radio. Of course, financial markets reacting is one thing. The White House reacting is another, Joe. We did get a statement from President Biden after today's data. Didn't talk necessarily about CPI specifically. The first line of the president's statement, today's report shows wage growth has been the strongest of any economic recovery in 50 years, though he did go on to point out inflation declined by 2/3 from its peak, and he knows there's still work to do to lower costs. Certainly the data suggests that work still needs to be done.
He didn't talk about shelter costs in the statement, did he?
No, he did not.
There are some problems here, which is why the market is responding the way it did. This is all about the trajectory, right? And expectations. White House has a pretty good economic story to tell, but the market's not buying this.
Absolutely not, as the market is now thinking, okay, maybe they weren't going to cut in March. We'd already priced that out. Then the question was May. Now it looks like the odds are on July. We're going to be in the second half of the year.
And the second half potentially of a re-election campaign. That's where we start our conversation with Anna Wong, who's with us here at the table today from Bloomberg Economics. Anna, great to see you. We've talked so much about a potential soft landing, and I wonder how this plays into it.
Yeah, so I think today what's interesting is that we think that it's the seasonal variation that drove this upside surprise in CPI, and also that you could see that some of the jumps is due to volatile categories like airfares and hotels, and usually the next month it could just go right down. For the Fed, what matters most is the core PCE deflator, and we saw from the CPI revisions last week that in fact the momentum of shelter prices, housing rents, was actually for a stronger disinflation momentum going into New Year. A large part of that component is actually predictable based on real-time private measures of rents. And so I think that today's CPI report doesn't really change the overall narrative that disinflation is making progress. And what the market is not pricing in today, however, is the report of small business surveys, which actually shows that small businesses are not planning to hire as many people, which actually would cause the Fed to cut earlier than people thought.
Well, they're certainly thinking it won't be as early now today in light of the data, but we know that those expectations too are volatile as we consider whether it could be May, maybe July. But Citigroup was actually out with a note yesterday, Anna. I'm sure you noticed this, essentially saying that traders need to be pricing in the risk of the Fed hiking again, that they shouldn't necessarily be writing that off. And theoretically, inflation data like what we are seeing today suggests that the Fed may think there could be more tightening out there that they need to do. Do you think that risk is zero, that there will be another hike this cycle?
That's actually a very good question. Actually, AI thinks that Citigroup may be right. So we built this FedSpeak index using machine learning, which takes into real-time Bloomberg reporting on FedSpeak. And it actually has been flagging that the risk for a hike is actually non-zero. That, in fact, based on the rhetoric of Fed officials alone, it suggests that a hike could, possibly be in play.
Wow. Did you know we're using AI like this in our reporting, Kaylee?
It's amazing.
Do you have like a back room with this AI machine? Where is this happening?
Well, the AI is actually based on my reading of FedSpeak. So
Yeah.
in this case, the AI is more out front than me. Well, I still think that rate cut is still the baseline, but it has been flagging to us that the hike is on the table.
So we have a secret room somewhere. She's not going to tell us
Well,
about
but
it.
the human still has to feed information
Right.
to the robot,
Yeah.
and then the robot then
The
goes
human
from there.
trains it.
The
However,
human trains
thereafter, the robot has a mind of its own.
That's incredible.
It's pretty cool.
Well, we are so cool at Bloomberg. This is why, you're here. You mentioned airfares and hotels. Are we still revenge traveling out of COVID? This has never really stopped, has it?
I think the revenge traveling is happening with baby boomers. Look at cruise bookings, look at all these that, and the baby boomers spending is based on stock market performance. I think as long as S&P 500 is rallying, we will continue to see more excess early retirement and more spending by baby boomers.
Interesting. I like cruises. I'm not a baby boomer. I'm a millennial,
You're a
and I'm a
cruiser,
cruiser.
though.
But
Yeah.
I know cruisers are a
But cruises
polarizing
went crazy coming out
topic.
of COVID, too, right?
Absolutely.
But you
the first
won't
thing you
have
did?
time to go this month because you are here.
Well, that's very true. 2024, not a great year for travel for Joe and I, because there is this whole election cycle going on, and of course, inflation
Yes, indeed.
does play
Anna,
into
thank
that.
you. It's great to see you. Thanks for your reporting. Anna Wong, Chief Economist, Bloomberg Economics, with an awfully important report today, Kaylee.
Absolutely. Now, of course, as we consider inflation, what the economy is doing, and how that factors into the minds of voters, we should get a read on how
People are
voters
actually
feeling.
voting today.
Yeah, because people are voting in the state of New York,
Or shoveling,
3rd district,
or both.
if they are braving the snow. And
Yeah.
Kyle Kondik, the managing editor of Sabato's Crystal Ball at the University of Virginia Center for Politics, has been following New York 3 in addition to polls nationally. If we could just start there, though, Kyle, obviously it's Swazi versus Pillip, the Democrat and the Republican. This snowstorm, though, could potentially make what was going to be a low turnout vote even lower turnout. Who would that benefit most?
Probably benefits Swazi. So just to put it in perspective, about 80,000 votes were cast basically early in advance in 2022. It's the same thing in this special election. About 80,000 early votes were cast before Election Day, but that was only about 30% of the total votes that ended up being cast, meaning about 70% were cast on Election Day in 2022. This time, you'd always expect a special election to be lower than a midterm turnout, and so I think the percentage of the votes that are cast on Election Day are going to be a lot smaller than they were in 2022. And of course, that was an election that George Santos won by about 8 points. The early electorate, in terms of registration, was slightly more Democratic in 2020 in this special election than it was in 2022. Of course, Election Day was much more Republican leaning in terms of performance in 2022. Bottom line here is I do think that the snowstorm could have some impact here, and again, if it does, it's probably more helpful to Swazi than to Pillip.
This is a district won by Joe Biden by 8 points in 2020, yet this race appears to be too close to call. Siena had Swazi up by 4. I think you had the margin of error, and a snowstorm could in fact make the difference here. Kyle, what does that say about Democratic politics in New York since 2020?
So Swazi himself said it in the lead up to the election that Democrats have basically lost all the elections of consequence in that area in Long Island, Nassau County since the 2020 election. Bad results in 2021, bad results in 2022 when Republican House gains in New York State, both on Long Island and upstate, were arguably the difference between Republicans winning or not winning the U.S. House that year. And then Republicans had some more victories in the area in 2023. So, a lot of people on both sides of the aisle, when you ask them about this race, they think that the Biden +8 maybe overstates how democratic the district is, particularly at this particular point in time. I sometimes think if you picked up this district at Biden +8 with the same demographics and you put it in like suburban Philadelphia or suburban Detroit or something, Democrats might actually have felt better about this race. And, again, I think I'd probably still rather be Swazi than Pillip, particularly based on the fact that it looks like Election Day turnout may not be that great, although polls don't close until 9 o'clock, so there's plenty of time for that to change. But obviously both sides were spending like this was a close competitive race, and that's what the public polls said, and I think that's what the private polling was indicating as well.
Yeah, pretty remarkable the amount of spend we have seen, considering ultimately this may be a seat that's only held for 11 months because it's February of 2023 and there's going to be an election in November of 2024, and there could be some redistricting to consider here as well. Obviously, that's because this seat was vacated in a historic ouster of George Santos, as you mentioned. Was it a mistake for Swazi not to go after the Santos legacy specifically harder than he did?
You know, you have heard some of that from Swazi and from Democrats because Philip has not been an unusual, particularly energetic campaigner. The media has been sort of critical of her for not talking to the press, which I don't know if that necessarily matters all that much. But she hasn't been maybe as visible, I think, as maybe some Republicans would have liked. And there is some indication, just historically speaking, that if a member has to resign, and there's a special election, the party of the member who resigns sometimes pays a price in the special election, and so maybe that also helps Swazi in this race, as effectively the challenger in this seat, even though he used to be the incumbent prior to 2022. So that's a factor to watch. But I would say that did come up to some degree in this campaign.
Has George Santos been forgotten? At one point, this was going to be a Democratic seat for the rest of our lives because of what he pulled off. Now we're hardly talking about him, at least in the conversation surrounding this special election.
People have pretty short memories, I think, although Santos himself has remained, he's kind of this celebrity now. He, during when the House Republicans failed to get through the impeachment of Secretary of Homeland Security Mayorkas recently, he tweeted out, "Miss me yet?" which I thought was kind of funny. It was like those George W. Bush billboards after Obama took office. It was kind of a funny inside joke. But Santos is, he's still basically a public figure, although, he's going to have his own reckoning with the law, it seems like, here sooner rather than later. But, people move on pretty quickly.
I want to go back to the point you were making a few minutes ago, Kyle, about how if this district were a suburb instead of another city like Philadelphia, instead of being on Long Island, it may be different. To what extent should we be viewing today's vote as a litmus test for New York State broadly in 2024 and then just broadly national electoral politics? What is it realistically going to tell us?
I would caution against drawing too many conclusions from any special election. Generally speaking, the special elections in mostly state legislative races, what we've had since the Dobbs decision in midsummer of 2022. Generally speaking, it's gone pretty well for Democrats, and if the Democrats do win the day, it would be in keeping with that. But again, New York has been pretty bad for Democrats. It may not necessarily be comparable directly to some of the other swing states. So again, for lots of different reasons, don't make broad conclusions about this. It is important, though, in the sense that the Democrats only need to win 5 more seats than they won in 2022 to win the House back, and this could effectively be one of them. Because I think if Swazi wins today, I think he's probably favored going into November, particularly if he gets some help in redistricting, which, as you mentioned, is another wild card.
We're talking with Kyle Kondik from Sabato's Crystal Ball, where he's managing editor with an eye on New York 3, the special election that's underway today to fill the seat once held by George Santos. Polls on Long Island don't close till 9 o'clock tonight, Kyle. This is going to be a late call, huh?
Yeah, that's right. And again, that might also mitigate some of the problems with people voting because of the snow today. At least if people do want to brave the elements, the weather gets better, they'll have an opportunity to do so. And of course, there is fairly robust, early/absentee voting in New York State now. That didn't always used to be the case. But so again, you had an early/absentee vote that was very comparable to what was done in the 2022 midterm. So people did have an opportunity to vote in advance here, which really is the whole point of having those sort of options.
So today's bringing the special election, a snowstorm with it. It also brought inflation data, Kyle, that we were speaking about a moment ago, hotter than expected, not necessarily heading in the right direction if you're an incumbent. To what extent is the economy still weighing top of mind for voters, not just in New York 3, but broadly, or has it now been supplanted by immigration and the border?
It seems like the economy and immigration are two, big factors, and people's perceptions of things. Biden is not perceived as doing particularly well on either of those important issues. And so, any White House would want the economic news to be as good as possible. I think you all were just talking before about how you certainly could point to some positive indicators on the economy, but inflation is still a problem. And again, no matter what the rate is, I do think people sort of feel higher prices and just paying more for stuff than they did a few years ago. And that would be the case even if if inflation itself, the inflation rate is getting smaller. The higher prices compared to the past.
Still means prices are
Wonderful.
going up.
Ever not be talking about this with Kyle Conway. Great to see you, Kyle. Thank you. We'll keep you posted, of course, on the results from New York 3. I'm guessing that's going to be tomorrow, Kaylee, right here on Balance of Power. Straight ahead, we're watching for President Biden. He has scheduled some time to speak following this passage of the bill in the Senate. We'll have that ahead on Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet, 121 on Wall Street. We are awaiting remarks from President Biden. We will have those for you live right here on Balance of Power. Stocks lower across the board, not just lower, but in fact, it is the worst day for the Dow so far this year. Right now, the Dow Jones Industrial Average is down 539 points, a drop of 1.4%. The Dow now at 38,256. S&P 500 index down 1.4%, down 67 points, 49.53 on the S&P. The Nasdaq Composite Index is down 1.7%, 15,676 on Nasdaq. 10-year 4.28% with a 2-year that's yielding 4.62%. Wall Street got a reality check this morning with hotter than estimated inflation data that is triggering a slide in both stocks and bonds. Spot gold at $19.94 the ounce. Gold down 1.3%. West Texas Intermediate crude up 1.6%. WTI 78.18 for a barrel of crude. Bitcoin down 1.5%, 49,091 on Bitcoin. On a down day for the rest of the market, JetBlue now up by 18.8%. Activist investor Carl Icahn has taken a 9.91% stake in the airline with plans to seek at least one spot on the board of directors. Recapping stocks lower, S&P down 67, drop there of 1.4%. I'm Charlie Pellet. Balance of Power continues. Once again, Joe Matthew and Kaylee Lines.
Charlie Pellet from New York, thank you so much for joining us. Meanwhile, live from Washington on Bloomberg TV and radio, we are seeing how the House is going to move after the Senate very early this morning passed a supplemental aid package with more than $60 billion in funding for Ukraine with 22 Republican votes, Joe. But if you ask Mike Johnson in a statement last night, haven't gotten the update from this morning, America deserves better than the Senate's status quo. That's the quote from him.
Even though they passed something.
Right.
And there was a deal on the border that they had to take out to pass it.
Right.
So I'm confused about that part. Everybody wanted that 6 o'clock flight out. They got this done around 5:30 in the morning.
Yep.
Couldn't take a nap, come back this morning. Let's go through. We'll surprise everyone when they wake up tomorrow. And they sure did. Just doesn't seem like there's a path in the House for this. So we could be already done.
Yeah, we're going to hear later today from the House Minority Leader, Hakeem Jeffries. He's going to be speaking around 4 p.m. Eastern time. And I wonder if the question of a discharge petition will be coming up. Because in the absence of the decision of the Republican Speaker to put this on the floor, if you could get enough Republicans to join up with Democrats to sign that thing, which is very hard to do, hasn't been done a lot historically, maybe that's your mechanism to pass it, even if it is a heavy lift.
Like twice or something, ever,
Yeah.
right? So that would be a pretty big deal if it were to happen. And that's where we start our conversation with our panel. Let's assemble Bloomberg Politics contributors. Rick Davis and Jeannie Shanzano with us here the morning after, or I guess day after the morning, something like that. Rick, you've had some late nights in the Senate. What was the purpose of pushing through like this, knowing that, well, this bill just might not go anywhere in the House?
Well, I think the primary purpose is so they could get out of town. You know, they've been staying home after school since Friday of last week. And so nothing usually gets in the way of a senator and a CODEL or a vacation. So I think that's number one. Number two, they really did want to dispatch this. I mean, there's no question that Chuck Schumer had this as his highest priority. And I think he wanted to get something done. And I think hoped he would get it done with as many as 70 votes as what they got and sent over to the House to put pressure on them. Look, I mean, right now, everything is starting to turn toward the budget come March 1st. We have a looming government shutdown. And so getting this at least this far before that really presses upon the House of Representatives at least makes it part of that conversation. Remember, one of the ways this could happen is for that Senate bill to be added to an omnibus or a spending bill coming out of trying to stop a government shutdown.
Well, we're 16 days away from the first deadline of March 1st. That's when the first tranche of funding will expire. And then a week later on March 8th is the second tranche. So we have that looming, Jeannie, but it really doesn't seem at this point that anyone in Congress is really focusing on those upcoming deadlines because all of the chatter we're hearing is around this supplemental package. And there's been at least 7 House Freedom Caucus members who have come out today to say they will be voting no if this Senate passed bill comes to the House floor. How do you see this shaking out? What is Mike Johnson going to do here?
I think what he's going to try to do is he's going to try to craft individual bills, like, sort of reminiscent of the Israel bill that didn't pass. And he's going to try to do it like that. The problem with that is it doesn't have much of a shot of passing or moving to the Senate. And so the reality is, absent a discharge petition, this thing is probably dead. And the discharge petition is so difficult to imagine passing. Because let's not forget, they lost Democrats in the Senate as well on the passage of that bill early this morning. They'll lose more Democrats from the far left because of the issue of the Gaza Strip and Israel. And so the discharge petition, really hard to see that going forward. If Mike Johnson doesn't put this on the floor, hard to imagine this thing gets passed. And I am very happy that President Biden's going to come out and talk about this, because that is what he needs to be doing every minute of every day, talking about the import of this and telling people why it's in United States interest to be moving in this direction.
Well, let's get into that. Rick, you've been critical of Joe Biden for not engaging, at least publicly, sooner. Is there anything he can say today as we wait for him to address the nation from the White House? Anything he can say that would move the needle?
Yeah, look, we heard from Mitch McConnell earlier this last week, making an articulate geopolitical argument of why this is important to the United States and our own security and our own economic well-being. We heard last night Chuck Schumer, well, we didn't stay up last night long enough to hear Chuck Schumer give his very eloquent address about the need to do this. And so it's kind of last man standing. It's the president's chance to really put this into context of what this means to the average voter, to Americans. And the idea that we can just look inward and hope that nothing else hurts us comes in a week where we've seen Donald Trump say that he, would be fine with Russia invading some NATO countries because they haven't paid enough into NATO, that we've heard from the intelligence community that there's a 2-year plan for Russia to do just that, building up a 1.5 million man army. I mean, we are at the precipice of a existential problem in Europe that would affect us dramatically, least of which economically and most of which with our blood and treasure.
Yeah, absolutely. And that is a point that Biden has tried to connect. I guess it's a question of to what extent that messaging has been effective. You raised Donald Trump. Of course, he did put his thumb on the scale, Rick, on the border package, the deal that was struck just last week before it died a very quick death in both the Senate and then the House, where it was pretty much dead to start. It never was alive in the House of Representatives. Do you think he will be as vocal on this supplemental package, and particularly as influential in terms of affecting the behavior of House Republicans on this issue?
Well, he certainly tried with the Senate earlier this week. He made this statement that he thought this ought to be a loan program and not an investment in security. And the only taker seemed to be Lindsey Graham, who aped that argument last night. So, he can't help himself. I think as far as he's concerned, he already is president, that the Senate and the House work for him, not with him. And he has a feeling that he's got to direct them to do the right thing. That is a lot of noise until at which point in time we had a speaker like Mike Johnson, who's inexperienced and frankly has tended to bow to Donald Trump on issues of importance like this and on the budget.
Well, let's just consider this for a moment then, Jeannie. How about a loan, a zero-interest loan to the countries in question, as Lindsey Graham put it, as suggested by President Trump? Should Joe Biden consider this a zero-interest loan with no due date? Does that make everybody feel better?
One word, N-O, no. It is a ridiculous proposition, a ridiculous idea. Stunning that somebody like Lindsey Graham, who was, a hawk, who pushed back against Donald Trump in 2016 on so much of this nonsense, really would come out and say that yesterday. The reality is we are not giving money away to other countries. We are helping the United States. And what Joe Biden needs to do today is echo what Mitch McConnell, Mitt Romney, Chuck Schumer, and other thinking people on Capitol Hill said last night and in the last few weeks. And quite frankly, what Americans have been saying for decades who know about foreign policy and our security future. He's got to make the case that this is in our best interest, and we won't be secure without it. We do not want to go back to 1939, and age can help him in this. He can give us all a history lesson, and I certainly hope he does that, and he does it vociferously. But the loan idea, no way. We are not running a bank here. This is a country. We have to secure ourselves.
Well, Jeannie, would the real way to move the needle for Republicans is for Biden to say, A, this is important as we work for the security of other countries, which is also the interest of our own security, but on the subject of our own security, here are also some executive orders I'm willing to sign on the border so we can all get something that we want here. Should he address that at all?
Absolutely. Kayleigh, I hope he calls their bluff. I have long said, yes, you need to secure the border. Do it by EO if they won't pass legislation. And then let's see how the speaker pushes back against that. And so I do hope he is listening to you, Kayleigh, right now, and he does both of those things. They are, of course, needed. The border's insecure, secure it, and get the aid needed to Israel, Ukraine, and Taiwan, and do what is right for this country and the world.
We will find out together with Jeannie Shanzano and Rick Davis, our signature panel here on Balance of Power. It's great to have you both with us, as always, today. Great insights as we try to feel our way toward the next step here, Kayleigh. The preemptive rejection from Mike Johnson would say a lot, but we've had multiple folks on the broadcast here today suggest that time can change a lot.
Well, and we'll see what it changes in the Democratic side of the House as well. A statement just dropped from Hakeem Jeffries that says the American people deserve an up or down vote, and we will use every available legislative tool to get comprehensive national security legislation over the finish line. I wonder if one of those legislative tools he's alluding to is, in fact, a discharge petition.
That's word for word what he said in the briefing to reporters last week when he was asked about it. So I think we're getting warmer, and we could see history made again here, at least recent history in Congress. Pretty remarkable stuff happening before our eyes here today, Kayleigh. I'm Joe Matthew alongside Kayleigh Lyons. Let's get you up to date on the rest of what's happening around the world with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Well, you've been talking about it. The Senate early this morning approved that sweeping foreign aid package.
On this vote, the yeas are 70, the nays are 29. The bill, as amended, passes.
Today, we witnessed one of the most historic and consequential bills to have ever passed the Senate.
Senate Majority Leader Chuck Schumer extolling the virtues of the bill that would send $95 billion in aid to Ukraine, Israel, and Taiwan. It also includes humanitarian aid for Gaza. Next up is the House, where the measure does have an uncertain future. Special counsel Jack Smith has until next Tuesday to respond to Donald Trump's bid to pause his criminal trial for election interference. Trump wants the stay while he appeals a lower court ruling that struck down his argument that he has immunity from prosecution. The unanimous appeals court ruling last week rejected Trump's immunity claim. A winter storm has descended on the Northeast, dropping wet snow on New York City while snarling commutes, shutting schools, and canceling hundreds of flights. New York Mayor Eric Adams has urged all residents to stay at home. Hundreds of flights have also been canceled into and out of the region. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 1:40 the time right now on Wall Street. We've got the Dow, the S&P, NASDAQ, all trading lower. In fact, very close to session lows on the S&P. Right to the numbers, CPI Tuesday, and the S&P now down 68 points. That is a drop of 1.4%. Dow Industrials down 561, a decline of 1.5%. The NASDAQ Composite Index is down 272 points right now. For NASDAQ, that is a drop of just about 1.6%. We've got the 10-year yielding 4.28%, the 2-year 4.62%. Gold at $19.95 the ounce. Spot gold down 1.2%, while West Texas Intermediate crude is gaining 1.5%. WTI right now at $78.11 a barrel. Cannot ignore Bitcoin today, down 1.2%, below 50,000. Right now, Bitcoin is at 49,247. Nvidia's red-hot rally to start this year has Wall Street rushing to keep up, with at least 5 firms hiking price targets on the AI darling this month. UBS has lifted its target to 850 from 580. Nvidia shares now trading at 723. Right now, Nvidia is up by 0.1%. Again, recapping, move lower for stocks. S&P down 69, down 1.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash. Back we go to Balance of Power. Once again, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you, and welcome to the fastest show in politics. I'm Joe Matthew, alongside Kaylee Lyons in Washington. A 39-page motion.
Yes.
Kaylee and I have been poring over it, and by that I mean our legal team has. A stunning breach of precedent and historical norms. That's what the Trump team calls this immunity case, as they ask the Supreme Court to block the lower court ruling, leaving a lot of us to wonder what will happen to this Jack Smith trial.
Well, and Jack Smith himself is going to have an opportunity to weigh in. In fact, this morning, the Supreme Court says you have 1 week, the 20th. February 20th is his deadline to file his response. The question, though, is does he wait until then, or does he want to get this thing going, considering this trial was originally slated to start on March 4th, no longer until we sort out this immunity question. So here with more is Sarah Forden, who leads our legal team here in D.C. for Bloomberg. Sarah, he has until the 20th. Do we expect Jack Smith is going to wait that long, or is he going to try to drop this thing stat?
Honestly, timing is proven to be everything in this case. And we think that Jack Smith is ready to file much before the 20th, could even be as soon as tomorrow. Obviously, he is pushing to get this case back into the trial mode as soon as possible. The Trump team is saying it should be postponed until after the November election. So the tension is on. And we're parsing the tea leaves here because we don't know what the Supreme Court is going to do. But one question is, are they just going to rule on the stay, which basically pauses the federal trial? Or are they going to take cert, which means they would take up the actual immunity question themselves?
And they have the option to do either. Your job has become extremely interpretive, hasn't it? I mean, covering courts is one thing. You're in the sort of, you're through the looking glass when it comes to covering Donald Trump, especially on a week like this.
Well, and it's very interesting how all of these cases in courts are now interacting and intersecting, right? So it's not just the Supreme Court or just the appeals court. It's three-dimensional. So there is this sort of dialectic between all these levels. And then you've got the New York cases, which are also moving forward. So we have him showing up in Manhattan on Thursday for the pretrial hearing in the Bragg case. That's the Stormy Daniels hush money case.
Right.
And then we're expecting a verdict in the New York fraud case on Friday. So there will be lots of action this week.
That one, of course, civil. The only real question is about the financial penalty, whether or not he has to pay, as the prosecution asked for, $370 million, which is nothing to sneeze at, surely. The hearing, though, on Thursday, obviously the judge is going to be able to consider a number of motions that Trump and his defense team have filed. And the question is perhaps whether or not he'll give a signal that trial is going ahead as currently scheduled on March 25th, right? Is there a high likelihood that it's going to end up being delayed?
Well, at this point, there doesn't seem to be any pressing reason to delay it unless there's a legal issue that comes up that warrants more time. But it's not like there's another trial in course that he has to compensate for. So it very well could go ahead.
That's
We'll
remarkable.
Be the first out of the gate, if so.
A lot of folks seem to think it will be. If there's a quick ruling from the Supreme Court, though, is there a chance that Jack Smith gets his case back on the docket in March, or that would be wishful thinking for him?
So that would depend on how long it takes the judge to kind of get the trial ready. So she would have to send questionnaires out to jurors, bring the jury pool in, do jury selection. She suspended the March 4th trial date just for that reason, because she couldn't do that in time, without this immunity question resolved. But now it could move pretty quickly if they do decide to go forward.
They could be happening in tandem, then, it sounds like.
Yes.
Wow.
It's all going to come down, though, to the decision of the Supreme Court, which is also facing presumably another deadline in March, the day after this trial was expected to start, March 5th, this Super Tuesday, where Colorado is holding a primary. Theoretically, there is still an open question as to whether or not Trump is going to be on the ballot in that state. So the court probably only has a few weeks to actually issue a ruling on this after they heard arguments last week.
Exactly, and we're expecting them to move as quickly on that as possible. I mean, one thing
How quick is possible for the 9-justice High Court?
Well, it was pretty clear from the arguments that they were very skeptical of the Colorado decision, and even, justices on both sides of the political spectrum. So it seems that they are mindful that they need to make these decisions in order for the election process to move forward smoothly.
Whenever we talk about this stuff, it's always played against the calendar and the election itself. What will be able to take place before people vote, knowing that if Donald Trump is elected, he will likely cancel the remaining trials, or would certainly have the ability to do that. The Supreme Court is certainly aware of this, right? As Supreme Court justices, are they compelled? Do we have any way of knowing to get this done, get one of these done before the election?
Our observation is that the courts at all levels are being very mindful of keeping these cases on track, and that there's this tension between parsing these really unprecedented issues, 14th Amendment and immunity for a president, former president, and getting things moving so that they can let the process play itself out.
Well, and to Joe's point, so that you don't potentially run into a question of whether or not a sitting president is actually going to be sentenced to anything, whether he can just pardon himself. The one case, though, he can't do that is Georgia, because it's a state case. That isn't federal. And we actually thought Trump himself might be in Georgia instead of New York on Thursday, because there's a hearing in Fani Willis over the question of her relationship with a prosecutor on her team. How important is that hearing on Thursday to the way this case moves forward?
That is going to be very closely watched, because the big question in this Georgia case is Fani and her lead prosecutor, or one or the other, going to be disqualified from running the case. And as you said, if Trump were to be elected and to make these sort of federal investigations or cases go away, he could not do that with the state cases. So the Bragg case in New York and the Fani case in Georgia would not be, applicable for that.
I don't mean to hopscotch around here too much, but Joe Biden's got his own special counsel he's been dealing with recently, and there's a move now on Capitol Hill to get Robert Hur to testify. There are 3 chairs. They'll sound familiar: Comer, Jordan, and Smith, likely to testify before the Judiciary Committee. They want him to provide transcripts, recordings of the Biden interview that compelled him to say that he was an elderly man with a poor memory, and maybe get him to say a little bit more than that. That would be traditional, though, for a special counsel to testify following a big investigation like this, wouldn't it?
I mean, I don't think it's happened before, or it has happened before.
Robert
but
Mueller,
they've all testified. But I guess the question here is, how much political charading is this?
Absolutely.
Obviously, the report was devastating and sort of hit at Biden's weakest issues at the moment. So it would just be sort of more churn, more focus on that question of age, which everybody's parsing now.
Just imagine.
How old is too old to be president?
Well, that's right. Just imagine how many cases we've run through in the last less than 10 minutes.
And to your point on this special counsel case for Biden, it was related to classified documents.
Yes.
He wasn't charged with any crimes. Trump was charged with more than 30 crimes in his own classified documents case, and we hadn't even brought up that case until now. There's just so many legal issues that could be highly consequential to the outcome of this election in November, and it is dizzying, to say the least.
Yeah.
I'm not envious of Sarah for having
I'd
to
like
keep
to
track
be Sarah
of all of
Forden
this.
right now. Thank God for you and the work you're doing. Really appreciate it. Of course, runs
thanks
our
for
legal
having me.
coverage here in
Great.
Washington
You
at
guys are
Bloomberg.
staying on top of it.
Sarah Forden, with your help, as always. I'm Joe Matthew alongside Kaylee Lyons, with much more to follow here on the fastest show in politics. Coming up here, we're going to talk about what a Trump presidency might mean for the Inflation Reduction Act. We haven't talked about the IRA in a while. It's straight ahead, only on Bloomberg.
Listening to Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Donald Trump, not a big fan of the IRA, Kaylee. Not to be confused with the IRS. We know that as well. The Inflation Reduction Act.
Yes.
Not something we talk about a lot anymore, but one of the real pillars of the Biden administration's legislative accomplishments. Can you imagine what a Trump administration would mean for all these clean energy subsidies?
Well, that's a question that Bloomberg Intelligence is grappling with. And interesting to have this conversation on a day where we found out via economic data that inflation pressures are very much still there. And what you hear from the administration is that efforts like the Inflation Reduction Act are starting to eat away at inflationary pressures. A lot of it hasn't yet kicked in. And I wonder if it's those parts that have not yet kicked in, the money and the credits that have yet to be doled out that are in question.
It would take years to unfold.
Yeah.
That's why Nathan Dean and his colleagues at Bloomberg Intelligence, his team, put their expertise on this to get a sense of what it would look like. And he's with us now, among the most popular voices here on Balance of Power. Nathan, good to see you. Are we talking full repeal? I remember repeal and replace was the refrain after Obamacare, or less systemic than that?
Less systemic than that. I don't think you're going to see full repeal, partly because, look, you may see it on the campaign trail, but if President Trump wins in November, and I'm using him as a presumptive nominee, if he wins, then a lot of the business interests are going to come in, because there is a lot of these tax credits, these carrots, if you will, that are going to red states. There are projects in Texas, in Florida, and so forth that if the repeal and replace were to be implemented, they just dry up overnight. So instead, I think what you're going to see is if President Trump wins, you're going to see him begin to use the power of the executive order to direct agencies like Treasury to begin to whittle away at some of these clean energy tax credits. The reason why it's so important is a lot of these solar companies that are out there, if the IRA tax credits don't exist, they're going to be in a real challenging environment. So we're getting a lot of questions from clients at the moment saying, hey, can you help us with our 1 to 2 to 3 year planning? Because the IRA it's very imperative that the IRA sticks around for a lot of these companies.
So you're operating under the assumption that there's not really a world in which, even if Trump were to win and be in charge of the executive branch of the government, that this could be outright repealed in its entirety, because it likely wouldn't pass in Congress.
Yeah, so there's two scenarios at play here. I mean, for those of you may recall, the IRA passed via reconciliation. So you need a majority in the House, a majority in the Senate. You don't need a filibuster. You need the president to sign off. So you would essentially need a red wave in this scenario.
Yeah.
So that's the first assumption. If you get that red wave, then the second assumption is the business community is going to come in here and try and tell some of their Republican allies, if you will, maybe you don't need a full repeal or replace, maybe we just need targeted changes here. And remember, for reconciliation, and by all means, I don't want to get into a reconciliation discussion on air, but for reconciliation, it's a procedural tool that you can only use once per fiscal year, and there are certain things about it, and I don't think the Republicans, if they had a supermajority, meaning the House, the Senate, and the White House, would want to use that process for the IRA.
We haven't had to explain reconciliation on the air for a minute.
Yeah.
So thank you for sparing us. But you said something important. If these programs, these projects are so popular in these red states, why are we getting rid of it?
Well, I think a lot of it is also just like the institutional thinking of, seeing these tax incentives go to clean energy at, when, you'll have President Trump talk about coal country, for example. Yeah. And so I think, if you look at the Republican bills that are going through Congress right now, they have this bill that would repeal all the tax incentives tied to this. I just don't think that's going to be in place. Now, what you could see is changes to hydrogen credits, carbon credits, the electric vehicles. So if you're Tesla or Rivian, this is certainly important at play. But you should note that if President Trump wins and he does these executive orders, then it will be up to the Treasury Secretary to implement a lot of this. And then you would also then be subject to probably business influences and lobbyists and so forth saying, hey, we like this tax credit, don't touch this, or touch this instead. So a lot of moving parts here, but we would just say that for now, we have a very low odds on a repeal, slightly bigger odds if President Trump wins on targeted cuts, but for your 1 to 3 year planning, you can just presume as if these things are pretty sticking around for a little bit longer.
Just another reason for your phone to be ringing off the hook these days, right?
Just wait until we're about a week from now closer to a partial shutdown.
Absolutely.
And then Nathan Dean's life is going to be much more fun.
You'll drop by and tell us about it. Nathan Dean at Bloomberg Intelligence, many thanks as always. We are his clients here on Balance of Power. As we turn our focus to New York now, preparing for Bloomberg Business Week. On this CPI day, Carol Master and Tim Stenovec are standing by. I have a sense of what you might be talking about here, Carol, and I'll tell you what, we're talking about hotels and airfares still. Can you tell us, are you both of you guys still revenge traveling? Who's doing all of this traveling?
I will say I did a big trip in December with my daughter overseas, 3 different cities, bunch of different hotels. So that was a big revenge trip in a big way.
Sounds pretty great.
Yeah. So there's a little bit of that going on. But yeah, this inflation print, right, Tim? Like it's been another reset, if you will, when it comes to Fed expectations.
Yeah, look what's happening with bond yields today. The equity market's certainly doing a reset. Look what's happening with bond yields, the equity markets during a reset. And I think the question is, is the Fed when is the Fed going to cut rates? And it really resets when people are thinking about when the Fed is going to cut rates. There are people even questioning, summer at this point.
Yeah, well, and the other component of inflation, in addition to all of the travel-oriented stuff, is the fact that shelter cost pressures are still extremely elevated. Yep. And of course, you're thinking about high prices for rent. Obviously, home prices are elevated too, and mortgage rates are still high. How do you fix it if rates stay high and no supply comes onto the market? And I'm always biased in this conversation as a wannabe first-time home buyer, my entry point doesn't look like it's going to be soon, Joe.
An entire generation reaching for this at once. I know you guys will be talking about it, and we look forward to the conversation, as always, with Carol and Tim. That does it for us. Kaylee, I'll meet you at 5 o'clock
for the late edition of Balance of Power here on Bloomberg TV and radio. You're in good hands with these two. Let's send it to New York now. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer.
I love looking at different things that are going on in our economy. The Fed president's kind of battle it out about what's going to happen next.
And Tim Stenevec.
This story really struck a chord with me. The cost of education. Consumers are out there spending money. They have jobs, and they're continuing to spend money.
On Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Radio and Bloomberg Television, on YouTube and Bloomberg Originals. It is Tuesday, February 13th, Valentine's Eve, you might say.
Ooh, happy Valentine's Day, Carol.
Yeah, exactly. And I wonder if Valentine's Day is going to cost us all a little bit more because, man, that inflation print, another reset in the market trade.
Yeah, higher for longer. We get the picture. We've warned you all. Well, today's hotter U.S. inflation print, a blow to all those bets on a Fed that cuts rates later, or sooner.
Yeah, exactly. I mean, that's the debate that goes on. You definitely saw it play out along the U.S. Treasury curve. We're going to talk about that. With that in mind, it's where we're going to start in just a few minutes. We've got our econ and market 1-2 punch in terms of a roundtable and that reset when it comes to investor. And then, though, with equities overall down, folks, in fact, we're pretty much near our lows on the S&P and the Dow in particular. There's one name that is certainly bucking that downward trend, and that is JetBlue. Shares soaring, and that's what happens to him when an iconic activist investor takes some interest in your company. We're talking about Carl Icahn.
Yeah, that stock's certainly higher today. Also, she says after the shell shock of interest rates last spring, this season is going to be marked by a wave of buyers. We're going to talk real estate, catching up with Lisa Littman. She's licensed associate real estate broker at Brown Harris Stevens. Get a temperature check of what things are looking like in New York City.
All right, and then we're going to finish up with Tiger. He's got a new partner. This after he said goodbye to Nike. Although they were together for a long time, and I don't think there were any hard feelings. It's just sometimes you move on.
Hey, it's business.
Speaking of business, let's get a check on your top business stories. A look at that trade. Here's Charlie Pelley.
All right, thank you very much. From Tiger to the Bears, because right now they are growling on Wall Street. The Dow, the S&P, NASDAQ, not just deeply in the red, but very close to session lows. Right now, the Dow down 606. That is a drop of 1.6%. S&P very close to session lows, down 74, a decline right now of 1.5%. We've got NASDAQ lower by 286, a decline now of 1.8%. Bottom line here, big-time reality check this morning. Hotter than estimated inflation data triggering a slide in both stocks and bonds. Again, the Dow down 612, down 1.6%, worst level of the day. Spot gold down $26 the ounce, down 1.3%. The 10-year yield now 4.29%. The 2-year 4.63% on the 2-year. And West Texas Intermediate crude oil is trading higher by 1.2%, 77.87 for a barrel of WTI. Our Abigail Doolittle will have a whole lot more on the markets coming up in just a moment. Carol mentioned JetBlue. That stock flying higher now by 20.1%. Year to date, this stock is up more than 30%. Activist investor Carl Icahn has taken a 9.9% stake in JetBlue with plans to seek at least one spot on the board, aiming to boost shareholder value in the wake of that near collapse of the carrier's deal to buy Spirit Airlines. Spirit lowered today by 5.7%. JetBlue now up by 20.3%. Again, recapping, worst level of the day for stocks, S&P down 76, drop there of 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, so much for an expected confirmation of easing inflationary pressures in the U.S. As we've been reporting, going in the other way. U.S. consumer prices jumped at the start of the year. You know that, you've been listening. Stalling recent disinflation progress, Tim, and likely delaying any Fed interest rate cuts. Again, another rethink, if you will, in terms of the trade today.
Yeah, the question is the trend still going in the right direction? With what put upward pressure on U.S. inflation last month, with us is Bloomberg News economics editor Molly Smith. She's here in the studio with us right now. So, Molly, today's inflation print, dig a little deeper, peel back the layers. Where is the pressure coming from?
Yeah, I mean, it's unfortunately still coming from a lot of these services categories that the Fed has been so worried about, and rightfully so. Shelter was over 2/3 of the increase, so much for seeing housing costs abating anytime soon. We also saw a big pickup in car insurance and health insurance, and these are things that people pay for every day. So this is like a real hit to consumers out there. And where we did see the easing is, the categories that have been easing all along. So it kind of speaks to that Fed concern that some officials have been raising lately, that the disinflation progress is just too concentrated. It's not broad enough beyond energy and goods prices.
What's problematic when you talk about shelter, when you talk about insurance costs, I don't know about you, but I get my new policy at the end of the year, and that's the rate for the year.
That's it. You're stuck. Exactly. As someone who's signing a homeowner's insurance policy, I just saw that one is going to be also, those premiums are coming up. And of course, if you live in an area affected by climate change, even more so. So yeah, these are things that people are contending with every day.
Tim, home insurance isn't expensive. Tim has had his own
Just
story.
don't even. I kind of put that behind me, Carol.
Tim has a good deal over here.
It was an issue.
It
was an issue.
It's going up. Everything's going up so much. I mean, even if you don't live in a place that's affected by climate change, you're paying for the climate change disasters that are happening, everywhere in the country, because all this stuff is pooled together. Okay, Molly, was there good news in the print? Is there anywhere where we see progress on inflation?
Well, I think that's. Pace? I mean, it's like. It's good news in the sense that, yes, prices of used cars coming down, but there was a little bit of a quirk there that there's a new way that the methodology was updated. So we'll have to see if that's going to be, as much of a drag on future inflation prints, as well as broader goods prices. Those are still coming down, energy as well. But that's just the thing. Like, that's really about it. It's not a broader disinflation trend that the Fed officials want to see.
Well, speaking of Fed officials, right, they have access to multiple inflation reports, including one more CPI print before the next policy meeting come March. Walk us through them, because we always talk about the preferred Fed gauge, whether, PCE, core PCE, super core PCE. Help me out in terms of what we really need to focus on in terms of what the Fed focuses on.
So that's been really the read through today, if we are looking for good news, is that the categories that saw a lot of strength in the CPI report don't have as much of a read through to the PCE. Either the weighting is a lot smaller, or those categories are calculated entirely differently, and it really just wouldn't show up in the same way. So PCE is still seen trending a lot closer to the Fed's 2% goal. Either way, I think this day really nailed the coffin on there's not going to be a rate cut in March, as Fed officials have been saying all along. So I think the market is really so much more on board with that now. And of course, even more time between May, June, July, and whatever those meetings may bring.
Well, I mean, I heard folks on surveillance earlier today saying that it kind of puts May out the window too. And there are questions about, okay, whether or not a cut is going to happen in June. What are your sources telling you? What are they thinking?
I mean, I think it's tough to make a judgment call about May right now when it's February 13th and there's snow on the ground in New York City, and we're talking about
nice job, Groundhog.
May. It's tough. But yeah, how can we say that with all the data prints that we're going to get between now and then?
Inflation print, okay, so a little bit hotter than expected against the backdrop of an economy, as Jay Powell reminded us, hey folks, it's not too bad. In fact, it's good.
It is good, yeah.
But to that point, Carol, I'm wondering how this sort of feeds into the latest jobs report that we got as well, which showed an economy that's adding more jobs than even analysts at the top end thought. And if that is stoking concerns more about inflation being more persistent than people thought.
I think this was also kind of reminiscent of January last year, that all of the data for that month of January 2023 was so strong. And you do get a little bit of a seasonality effect at the start of the year. Granted, a lot of these numbers are seasonally adjusted to try to smooth that out, but it is something that we still see from time to time. So I think some economists have also poured a little cold water on that. And as usual, we're never going to, make a real judgment call based off of 1 month of data, even if it is a collection of data points in 1 month.
I feel like, I don't know how many times we have to hear it either from Jay Powell or Fed officials. Folks, they're data dependent. And so even these daily swings, you got to remember that it's going to ultimately be that class of data or what the data points are come each Fed meeting.
And the revisions potentially.
Really good point. All right, Molly Smith, thank you so much. Economics editor here at Bloomberg News, joining us here in studio. All right, so from the data points that did move the markets to actually the market reaction we go, Tim.
Yeah, the S&P 500 opened lower. Treasury yields jumping after the release from the Bureau of Labor Statistics. Stocks moving off their lows, but rates staying elevated today. Traders, Carol, pushed out bets of when the Fed will start cutting rates and marked down March odds to almost zero.
Yeah, keeping track of those headlines in terms of market expectations. All right, let's get to it on both the rate and the equity moves on this Tuesday. Bloomberg News markets reporter Abigail Doolittle in our Bloomberg studio, along with Bloomberg News rates reporter Michael McKenzie back with us as well on Zoom in New Jersey. Michael, I got to start with you in terms of the rate market. The move up in rates, notable again, not a surprise to see the sensitivity in particular in that 2-year moving up above 2.6%. I get that, but I want to start with the 10-year because a source of yours noted, was it last week when we talked about 4.25 on the 10-year? We're there. Well done to you and your source. Yes. Is this it? And what does today's moves in the 10, in the 2, along the curve tell us about Fed policy?
Well, I think what the moves tell us is that when you move more than 10 basis points on one data point, it tells you that there's a lot of volatility. It also tells you a lot of people are offside. So entering this week, we did see through futures positioning, the street was long bonds. They've been respecting the ranges. I think the big story today is the bond market, the yields have risen above what have been pretty good ranges since December. So we're at new highs for the 10 years since late November, new highs for the 2 years since mid-December when Powell made the pivot. And if we get another upside surprise from retail sales on Thursday, I think yields will continue to move higher because I think a lot of people are underwater here. And that's the more speculative type traders who are long treasuries going into this week. They're going to have to keep on cutting. So I think for longer term investors, they can probably wait here and just see how far this sell-off extends. But there is a lot of, having spoken to a few investors today and yesterday, they like the idea that 10s are in that 4.25, maybe 4.50 range. They like the fact that 2-year is now above 4.60. We've actually took out nearly a full 25 basis point rate cut today. Going into the CPI, we were looking at about 113 basis points of rate cuts price for this year. We're now down to 90. Wow. So once you're now under 4 rate cuts being priced in by this market. So to a lot of investors, this now sounds it's more in line with what the Fed's telling us. They still see scope for 3 cuts, but it's probably going to be a second half of the year story. We've pretty much priced out May. June is now only just pricing in just under a full quarter point. So it does seem to me that it's going to be the June, September, December template for 3 cuts if they do come this year.
How things have changed in a short time, but like you said, yes. Mike, we are seeing now almost what the Fed predicted in December with the summary of economic projections. So, Mike, real quick, I'm wondering about the 10-year at 4.30. Are you going up to are you talking to people who could see it at 4.50?
Yes, a couple of people think 4.50 is the new 5%, and they do think that you're going to see that level come through. I mean, there are some people who prefer looking at 2s, not so keen on 5s to 10s, but then there are other investors who think, look, 10-year real yields got to 2% today. Yeah. That's high for an inflation-adjusted yield, and so that gives people comfort here that if you are going to buy in this area or this sort of zip code for the 10-year, right, over time you'll be okay. This is a good area to come in.
We want to get to Abigail because we're waiting on Biden, who's going to show up in any moment. Abigail, market reaction on the equity side of things. We saw that right away.
Yeah, right away. We saw a sell-off for the S&P 500 and the other equity indexes down more than 1%. And right now we're actually looking at an acceleration of this selling because just moments ago, Tim, you were talking about how we're off the lows. And in such a short period of time, we see traders recalibrating these bets. It's really basically a reality check. We've had this massive rally out of the October lows on the idea that the Fed was going to be at one point cutting 6 or 7 times. Now traders, as Michael just mentioned, are coming to terms with the idea that that's not the case, that the Fed is right, that they did say, yes, we'll be cutting, but it's going to be later in the year, so it puts valuation pressures on stocks. In addition, just the FOMO, the animal spirits.
All right, Abigail, Michael, thank you so much. To the White House we go, and President Biden.
Not that you wouldn't just focus on the statement. Earlier this morning, the United States Senate, as you all know, voted overwhelmingly by a margin of 70 to 29 to move forward with the bipartisan national security bill. Now it moves to the House. And I urge Speaker Johnson to bring it to the floor immediately. There's no question that the Senate bill was put on the floor in the House of Representatives, it would pass. It would pass. And the Speaker knows that. So I call on the Speaker to let the full House speak its mind and not allow a minority of most extreme voices in the House to block this bill even from being voted on. Even from being voted on. This is a critical act for the House to move. It needs to move. The bill provides urgent funding for Ukraine so it can keep defending itself against Putin's vicious, vicious onslaught. We've all seen the terrible stories in recent weeks. Ukrainian soldiers out of artillery shells, Ukrainian units rationing rounds of ammunition to defend themselves, Ukrainian families worried that the next Russian strike will permanently plunge them into darkness or worse. This bipartisan bill sends a clear message to Ukrainians and to our partners and to our allies around the world. America can be trusted. America can be relied upon. And America stands up for freedom. We stand strong for our allies. We never bow down to anyone, and certainly not to Vladimir Putin. So let's get on with this. Remember, the United States pulled together a coalition of nearly 50 nations to support Ukraine. We unified NATO, expanded it. We can't walk away now. That's what Putin's betting on. He just flatly said that. Supporting this bill is standing up to Putin. Opposing it is playing into Putin's hands. As I've said before, the stakes in this fight extend far beyond Ukraine. If we don't stop Putin's appetite for power and control in Ukraine, he won't limit himself just to Ukraine. And the cost for America and our allies and partners are going to rise. For Republicans in Congress who think they can oppose funding for Ukraine and not be held accountable, history is watching. History is watching. History is watching. Failure to support Ukraine at this critical moment will never be forgotten. I want to be clear about something, because I know it's important to the American people. While this bill sends military equipment to Ukraine, it spends the money right here in the United States of America, in places like Arizona, where the Patriot missiles are built, in Alabama, where the Javelin missiles are built, in Pennsylvania, Ohio, and Texas, where artillery shells are made. And the way it works is we supply Ukraine with military equipment from our stockpiles, and then we spend our money replenishing those stockpiles so our military has access to them. Stockpiles that are made right here in America by American workers. That not only supports American jobs and American communities, it allows us to invest in maintaining and strengthening our own defense manufacturing capacity. Look, this bill meets our national security priorities in the Middle East as well, and includes greater support for our troops serving in the region, who continue to defend against militia attacks backed by Iran. It also provides Israel with what it needs to protect its people against a terrorist group like Hamas and Hezbollah and others. And it will provide life-saving humanitarian aid to the Palestinian people who desperately need food, water, and shelter. They need help. And finally, this bill includes critical funding for our national security priorities in Asia, because even as we focus on the conflicts in Gaza and Ukraine, we must not take our eye off our national security challenges in the Pacific. It's the responsibility of a great nation, and we are a great nation that the rest of the world looks to. And I mean that, the rest of the world looks to us. The stakes are already high for American security before this bill was passed in the Senate last night. But in recent days, those stakes have risen. And that's because the former president has sent a dangerous and shockingly, frankly, un-American signal to the world. Just a few days ago, Trump gave an invitation to Putin to invade some of our allies, NATO allies. He said if an ally didn't spend enough money on defense, he would encourage Russia to, quote, do whatever the hell they want, end of quote. Can you imagine a former president of the United States saying that?